Up, everyone? Big show today.
Man, why can't we stop talking about Binance? Why do they always give us something to talk about?
Same reason FTX did.
Hey, you escalated this really quickly.
Sorry. I mean, I'll just mitigate that by saying, look, it's kind of another one of these like one personality shows. So, y'all don't send me hate yet. Like, wait, I've got more.
So I've sent an invite to Tone. I've sent you an invite via DM because I don't know why you're not coming up. Yo,
Tone's a speaker already.
he is. Oh, no, it doesn't. It
He
shows he's a
was,
listener.
he was, and then he moved back down, so he might be having
And
issues.
and Alex, can you send an invite to your mic?
Yeah, I said that he said he was at work today. So I shot him a DM. He said he's going to try to hop up. I'll ping him again.
Cool. We'll give it another couple of minutes and before kicking it off, just give the audience time to join and give the speakers time to join. Tone, how are you? Been a while.
Yeah, I think he might be having issues.
No, all good, all good. I'm trying to get Mike Alfred up. Oh, Sam has a court appearance and it's got sent now Reuters to take place at 1 p.m. Eastern Standard Time. So in exactly what's the time now? Oh shit! In 50 minutes he's got a court appearance. Interesting.
It's going to be interesting bail argument, to be honest with you.
He's so fucked. So we're gonna give everyone an update. And then we're going to give everyone an update. I think we're going to kick it off about Sam, just to give everyone else an overview of the layout of the space. So we're going to talk about Binance, because I've been a proponent of Binance for a while, but there's just constant reports we keep getting that are at least worth covering. But definitely I wouldn't compare them to FTX, so just to be clear for everybody, but I think it's just a responsibility to cover them. I haven't gone through them, so the panelists will go through those reports, and then we'll give you an overview. I was going to do an urgent space yesterday about SBF getting fucked. So Caroline, and I'm laughing, but it's pretty serious. Like serious, he's gonna be doing some serious time for the fraud that he committed. So we got Caroline Ann Wang that did a plea deal with the U.S. government, and they ratted out Sam. So Sam landed in the U.S. It was all coordinated by the SEC, what were the three bodies, Alex? I did a tweet about it. They're all coordinated together. Do you know what they were?
Yeah, it was the Southern District of New York, the SEC, and then the CFTC. And the Southern District of New York had 8 different charges, and then I believe there was a total of 12 across, so 4 additional across the other 2 government bodies.
And I got a document sent to me by one of the people involved that gave the agreement that the agreement that Caroline signed with the who was it, the New York District Attorney? Do you know what the agreement signed with, Alex?
Yeah, it was. It looked like it was from the U.S. Attorney from the Southern District of New York.
Yeah. And the plea deal is really generous from what I read. Did you go through it?
Yeah, I was reading through it as well. I mean, it's interesting because they always write out the maximum sentences possible for these, but from the initial research I did and talking to a few people in the legal space, it sounds like she could actually get off with, I don't want to call it a slap on the wrist, because anytime you get any sort of arrest or house arrest, it's obviously some amount, but it's nowhere near probably looking at the max sentences. But I don't think she'll get anywhere near that. It could just be a few years, even on house arrest, from what I'm hearing.
Yeah, and it puts Sam in a really tough position. Like, there's no argument he can make against against the allegations anymore. Just too much evidence against him, and it was just really cool to see how coordinated it was. So I was about to do a space about it yesterday, but I just didn't think, like, we've kind of squeezed that lemon enough. So from the extradition, and as soon as that happened, the plea deals were announced, and then the charges were announced by the New York District, the SEC, and the CFTC all within the same day. So it was a very interesting coordinated attack. But again,
Do
I'm
you think he's
swaying.
aware of it, or do you think it's something else he's overlooked because they're playing League of Legends?
Bro, I think we're past the League of Legends. If you look at the photos and people that were there in court, he's like, I'm just really confused because guilty or not, I'm just feeling pity for what he's going through. Like, it's really tough, no matter how guilty he is. Like, from living that high life of being the god of crypto to being in a jail cell in the Bahamas and begging to go to the US, and then landing in the US and knowing that his girlfriend and his business partner ratted him out. And then also remember, he didn't escape. Like, the 3 Hours Capital guys escaped, and we don't know where they are now. Do Kwon, we don't know where he is, as far as I know. But Sam, instead of escaping, he stayed in the Bahamas and he confronted the press. He was doing interviews. It just, nothing adds up. And I think even Vitalik did a tweet about it. Unlike the other criminals, he's probably the biggest of them all. Like, his is probably the biggest fraud we've ever seen. But still, like, what happened post FTX's collapse?
By the way, Do Kwon was in Bali last time I heard.
Yeah,
No, Serbia.
either
Someone
way.
I know had lunch with him. Yes.
But my question is, like, why did Caroline go back to, before we kick off the show, why did Caroline go back to New York?
Probably to deal with,
To do the plea deal.
yeah,
Yeah.
I mean, you have to go in, you have to do what do you like a deposition. So it's a sworn statement, which, they're not going to fly out the entire team from New York to go and take a sworn statement from her. And they also want to make her, you have to submit to the jurisdiction of the court. If they didn't have any jurisdiction otherwise, the only way that you get it is by what's called race jurisdiction. So literally, she had to be physically in the state. When you enter any location, you automatically submit to jurisdiction to the courts in that area, which is why you see things like that. Like, remember, there was a conference where somebody got hit with a service of process and I think maybe a subpoena while he was at a conference, because they could only do that when he was in the jurisdiction subject to their
That was Do Kwon.
That's probably not the reasoning. The reasoning is probably because the only way that she could submit to jurisdiction without being there in person.
No,
being there in person, yes, you could. Much
she
like
could,
being
but
there in person.
Sorry, go ahead.
Okay.
I'm pretty sure though the reason that makes the most sense is she went there to basically to make a deal, and that's the jurisdiction the SBF is going to fall under with the case. So it makes perfect sense.
She went there to do the same thing.
Like, to do this,
she's doing the same thing. Okay.
He was probably threatened.
I'm just saying, legally, this is what happens.
Yeah, she made a deal.
Again, she could.
Hey guys, I'm just gonna kick it off. I'm gonna kick off the show because I think everyone is here. I'm just trying to bring up Jack Minks. I'll try to figure out what the issue is and bring you up in a bit. But I want to kick it off with Binance, and we got Mike Alfred in the house as well. I think this is more important. I think the SBF story is really sexy, but if the fear, the FUD going around about Binance, is for me the only thing that matters right now. And I would like to know the substance behind it. So maybe Alex, you're pretty neutral about it. You've got concerns. So maybe you can kick it off with an overview, just focusing on Binance. What's the latest report that you were talking about earlier? And then I know Mike has been pretty vocal about his concerns. And it'll be good to get people on stage to also challenge, like Umbrella. I think you do a good job at challenging a lot of these concerns to kind of balance out the discussion. So the audience doesn't walk away from this with fear or ignorance. It'd be good to get educated objectively so they know the facts. But Alex, do you want to kick it off with just an overview before I get Mike to tell us what his concerns are?
Sure. Yeah, I can start off with just trying to give a lay of the land, and then we're trying to get Dirty Bubble Media on stage at some point. I pinned his article, which is also a good read. So I guess the first question is, where did a lot of this FUD initiate from? It's really been like two main sources in the past couple of weeks. So the first was a Reuters article dropped that basically said that U.S. regulators are possibly looking to make moves on a case they've had open since 2018, where Binance was under investigation for unlicensed money transmissions, money laundering conspiracies, and criminal sanctions violations. So that kind of got kicked up by Reuters. So it had people, again, starting to analyze how is this offshore exchange built, and also, Dirty Bubble Media, as he talks about in his article, he basically alludes to the fact that Binance US is actually just a head fake for regulators, and they might actually be moving a lot of those Binance US funds straight to Binance, and Binance US is there just to distract regulators. So that was kind of bucket one of the FUD. And then I think the second piece was that Binance brought in a firm called Mazars to do a proof of reserves audit, effectively where they wanted to quell the concerns in the wake of FTX that they were backing assets one-to-one. And unfortunately, I think in some ways the audit sort of backfired, because it basically raised questions around some of the actual financial reporting controls they had in place. It raised questions about how they had set up their corporate org structure, who was actually in charge. And then Mazars, which is the firm that actually did it, ended up stepping away from Binance. They said that, they won't sign off on calling this an audit. And they also took down their previous reports from crypto.com and some of the other crypto firms. And basically they said, we're not going to do any crypto audits. And then I guess just the last piece here to sum it up before we kind of dive in is like what has happened from, a tangible sense from this FUD. Well, according to DeFi Llama, this is on-chain assets. On December 11th, so about 11 days ago, Binance had about $66 billion in total value locked from their exchange wallets. That is now down to $55 billion. So there's clearly been, a lot of people sort of getting concerned, especially in the wake of FTX, and are beginning to pull funds. But I think the couple big questions I have are that relationship between Binance US and Binance, the offshore exchange. I also am concerned about Binance's control over BNB chain, which is the third largest blockchain in the world, and is one that they actually launched, and many people suspect they still have a lot of control over. And then lastly, I think their play in the media is very similar to a lot of what Sam was doing. They invested $500 million in the Twitter acquisition. They own CoinMarketCap and gave themselves a 9.9 trust rating score on the website. They've invested in Forbes parent company. So just a lot of, basically a lot of concerning trends that were similar to what we were seeing with FTX. And I don't think we should turn a blind eye to it given their size.
Yeah, so before we go to Umbrella and Mike, I just want to summarize the 4 points that you made. So the first one is probably what concerned me a week ago is Mazars' audit. After they published the audit, Binance was pretty proud of that audit, and then Mazars like, hey, I think they didn't call it an audit, they used another term, and then they removed the audit from their website and then announced that they're no longer going to do crypto audits. So that might sound, by the way, Alex or anyone, if I say anything incorrect or incomplete, do jump in. But that might sound concerning. However, I do know that the audit firm behind Kraken and I can't remember the other exchange also announced they're no longer going to do audits for crypto firms. Is that correct, Alex?
Correct. They were basically stepping away from that. It sounded like, and it's, I'll say it wasn't like they just stepped away from Binance. And CZ actually went on CNBC and he said his argument was that these firms actually don't know how to properly audit an exchange. But the sort of counterpoint that the host gave were that I believe Deloitte has came in and audited Coinbase. So a little bit of conflicting sort of takes there when they were on the show.
Yeah. So that's the first point, and I'll go through the other 3 points, and we'll go to Mike. The second point is
hey, Mario.
Yeah, go ahead,
quick.
man.
I finally got my audio fixed, and
Yeah,
I just boarded my flight. So you got me for like maybe 15 minutes.
Perfect. Tell us your thoughts on Binance. Yeah, we'd love to get your thoughts on Binance, Tone.
Okay, so look, I don't know about the internal workings of Binance, just like I didn't know about the internal workings of FTX. But I cautioned everyone not to touch Binance for the same reason I cautioned everyone not to touch FTX. When your exchange launches by funding it through a token, which I always considered an unlicensed, unregistered security, the only way it could end is badly. So the fate of Binance is going to be similar to the fate of FTX. Now, unlike FTX, it sounds like Binance is not like just blatantly taking their client funds and throwing them into a blender of their stupidity, Alameda, and their hedge fund. But it's just going to be a slower grind which may be better or may be worse, right? So I've always said that Ethereum is scammier than BitConnect because BitConnect was going to blow up sooner, and Ethereum can be with us for 10 years. So when Ethereum finally implodes, the pain is going to be worse than BitConnect, even though BitConnect was a straight up Ponzi. Same thing here. The pain of Binance is going to be worse than the pain of FTX, and Binance will go down because the entire operation is dependent upon the token. And when people lose confidence in the token, Binance is done. And they're probably not 100% capitalized. Maybe they're 80, maybe they're 70, not 1% like FTX was. But eventually, it's going to end badly. So I advise people, if you're going to use an exchange like Kraken instead of Binance because of the token aspect. And people feel free to just, call me a complete idiot. Go for it.
Yeah, can I jump on this?
Yeah, I want to get, I mean, if you don't mind, so, I mean, I'll let you comment quickly and then I want to go to Mike, because I know you probably disagree with a few points Tone made. So, I mean, I'll let you jump in, then we'll go to Mike to get more concerns about Binance.
Yeah, just on Tone's point, actually, he's right on one. I agree with him on the FTT token just went down by the SEC as a security. So now it's official. That means that will have repercussions on every single exchange that has a token.
When was that? So, when was that announced?
So it was today in CoinDesk article. I think I have it in my tweets. I have a link there, and and there were two articles actually on CoinDesk today on that, and the FTT definitely went down as a security.
Yeah, but
so
who cares? Who cares? FTT is zero, right? It's like the SEC has just come out yesterday and announced that Madoff was running a Ponzi scam. Who cares?
Yeah, but if FTT goes down as a security, that means BNB is a security as well, because BNB was an exchange token. That means KuCoin token is also a security. That means every other exchange
there is a big difference though, because BNB, to be fair, like yes, you can use BNB to pay transaction fees, but FTT did not have layer one blockchain. Like BNB is actually paid out to the validators as part of it. So in that case,
that came after.
The case, that's 100% the case.
But I think there's a big point.
Everybody's
missing a really big fundamental. Everyone's missing a really big fundamental point here about Binance and BNB is that BNB provides the liquidity and the trading for thousands of projects, which account for tens of billions, if not hundreds of billions, of market cap. So this is why BNB has fundamental value, and nobody seems to recognize this in this discussion. If you want to think of all the thousands of projects who have their paired liquidity in BNB, if you want to trade those projects, you have to buy BNB. If you have to pay gas charges, BNB. That's called fundamental.
That's a silly argument. That's a silly no.
It's not a silly argument.
No.
If you want to buy a DeFi project that's on the Binance chain, you have to buy BNB and you have to buy fees in BNB. Do you not understand that is what fundamental value is all about?
No, that doesn't make any sense. FTX was funding a shit ton of shitcoins also. Who cares? They're all going to go to zero once Binance token goes down.
Talk to me about the FTX chain and the thousands of projects that were on the FTX chain. Talk to me about those, because
that's the difference between exactly, like Sam. Like,
just because FTX didn't live long enough to build a database that they claim.
Sorry, I had to mute. Like, there's too much talking. Yeah, it's like there's also a lot of background from the thing, but I do think it's important. You have to, like, Sam's point, Tone, is that, and this is 100% factual, is that BNB is a layer one coin, which means, like any other blockchain, you need a token to actually incentivize people to maintain consensus over the network. And it's the only token that can be used to natively pay transaction fees on the layer one blockchain. Now, you could say that they started using BNB for other reasons, but if you're looking at it from like a purely legal standpoint, that is why BNB technically is not an exchange token in the way that FTT was, because it actually provides a layer of crypto economic security and incentive mechanisms for validators that Bitcoin does, that ETH does. And now, if you want to say that the way in which they do is different, that's fine. But Sam's point is valid.
Wait, apologies for interrupting, Alex. Okay, this is where I am a former SEC attorney. I am I'm a securities lawyer. I'm just going to say legally, none of that really is the priority in terms of determining whether or not it is a security. They don't care about layer 1 versus layer 2, and the argument that there's inherent value doesn't matter. Stock has inherent value depending on the company. That's not actually any part of the reasoning of whether or not something is a security. We just have
That's
to
not what the former SEC chair said when he gave a ruling on the Ethereum launch. He basically said that ETH is a commodity because you actually need to use it to transact on the network, and you need it to actually maintain security.
Wait, listen.
Not policy.
There's no policy that says why Ethereum or why Bitcoin were not deemed securities transactions deliberately. So we can't actually rely on a former chairman saying whatever whatever it was. People relied on Inman, who was the director of CorpFin, which is where I worked actually. And I'm saying, listen, this is how policy is made. There are a lot of people who talk all the time, especially within the SEC or about the SEC, but they don't actually understand how the rules get made or what policy matters. You hear Hester Peirce, and I say this very respectfully. She's a current commissioner, and she has been speaking often about what her views are on what the interpretation of particular laws regarding crypto should be. But that doesn't have any legal weight whatsoever. These are
agree with that, Alex. Could actually one question that's important though. There's no policy saying it's a security though yet, right? There hasn't been one either way.
Saying that it's a layer 1 is not what determines whether or not it's a security. The Howey test isn't the only thing that determines whether or not it's a security. I'm just going to say this since you have a wonderfully large audience. The Howey test is one part of one list that talks about all the things that might be a security. There's another list of things that are always a security, and there are another list of things that are never a security. So all of these together are why security lawyers exist. Now, this is just saying that it's very complicated and we don't have anything clear. And there's a reason why we don't have something clear like this, right? There's a reason why we don't have specific clarity regarding things on crypto. We look at the facts and circumstances of every single thing. Now, just to be clear, the BNB has been investigated for a long time. This is not new. BNB has been under investigation, to my knowledge, since 2017. Their biggest issue so far has been the money laundering issue, which, to be fair, is they have a higher percentage than any other exchange. But that's because they are by far the largest ecosystem, so more transactions occur.
Wait, Alex, question though, because I think can you answer this one question actually, Alex? So, because I think this is how it originally came up, is there has never been a policy they'll put in place saying that BNB is a security yet though, right? Because I think that was the initial thing, is someone basically was like, FTT is a security, which I don't even know if there's a policy on that. It's people have spoke on it. But yeah, if you could clarify that one thing, I think it's important.
Yes, there is nothing saying that it is a security. There is no correlative property between one particular security and another particular security. The only time that correlation actually happens is either in a no action letter where someone is saying you ruled this way on this. It doesn't determine whether or not I'm a security, but I'm saying that you should treat it the same, or in court, right, where they say this is a security, therefore, this should also be a security or not. But there's no policy that says anything with these particular qualities is a security. And
Okay, so I want to quickly jump in. I think you've given us, everyone gave us enough overview, and Sam, you want to jump in, but there's 4 concerns that we have, and I want to touch on the others, because the BNB being a security is an issue that's been discussed so many times over the last few years that it's definitely a valid concern, but not a new concern that we have. There's 3 other concerns that you mentioned, Alex. So I'm going to go through those and then go to Mike. So I want to go back to the concerns with Binance. There's 3 other concerns that I want to touch on and I want to go to Mike. So the 3 others are the commingling of funds. That one scares the shit out of me. Alex, you mentioned that to me today. I had no idea. I can see Mike sending a million emojis of 100%. Now that one is what I want to talk about. Commingling of funds, for anyone in the audience, is so when an exchange gets funds, they have to hold them one-to-one. Okay? That's it. They're not a bank. They don't have the right to use those funds for anything else. Okay? They just have their custodian of those funds. So if you put $1,000 in Binance, Binance will hold your $1,000 in a cold wallet. Well, that's what they're meant to do. Now, CZ has mentioned numerous times there's no commingling of funds, but there are people that have been, voicing concerns on this. So
there's actually a slight difference, Mario, too. I just should clarify. With FTX, they had a hedge fund that they were commingling with. The thing here isn't necessarily that they're not backing them one-to-one. It's that they're passing the Binance US funds to the Binance exchange, and Binance is under different regulatory scrutiny than Binance US.
But if they, before I go to Mike, if I go, Alex,
also because of
okay. So before going to, I'll let you touch on this in a bit, Alex and Sam, but I want to go to Mike. But before doing so, I just want to clarify one thing, Alex. So when they get, let's say I'm based in the US and I put $1,000 in Binance US, they send that $1,000 to Binance International, which already I'm guessing breaches laws, but I could be wrong. Got Fidgetal and Alex to confirm that. I can see Catskill putting 100%, which is good because I know Catskill is critical about Binance as well. But what are you saying? That $1,000, what does Binance International do with it, Alex, based on the report by Dirty Bubble Media?
I mean, that much I'm not sure on, right? Because theoretically they could use it in any way they want. They could even be holding it one-to-one. It just may be more so that they want to make sure that it's under their Binance jurisdiction. And then if they want to do things like swapping funds, it's like kind of out of the eye of regulators.
Okay.
While they
so that's an important,
US.
It's an important point. So what you're saying is they're shifting it from Binance US to Binance International, but Dirty Bubble Media does not make any allegations about using that money to trade or invest or do anything else. There's no such allegations by the report by Dirty Bubble Media. So other than moving it to Binance International, is that correct?
Yeah, it seemed focused on just moving it, but if anyone else has context,
yeah, exactly. I'm going to go to Mike now, but that's just to clarify for the audience, because it's very important not to mention anything wrong here. So it's being transferred to Binance US according to that report. This is not a comparison to FTX. I just don't want to make that comparison because FTX is just a whole different level. They've got the conflict of interest, having a hedge fund and an exchange, and then moving the money from the exchange to a hedge fund that gambles with it. It's just insane what they did. So there's no comparison, at least from what I see. But Mike, I'd love to get your thoughts on this point. And you've been pretty vocal about your concerns with Binance. So I'd love you to share with us what facts you have and what are your concerns that are not backed by facts but backed by hearsay, etc.
Well, listen, I don't agree at all with the framing of this as FUD. There are literally hundreds of data points that would suggest that there is potential fraud and deception here. I get that most people want to ignore that because they have money on Binance or they have investments that touch Binance. I got angry calls from hedge fund managers last week trying to convince me to stop saying stuff. That's a sign of fear because people know they're exposed. But I want to be clear about a couple things. One is that, I went on Bloomberg the week that FTX went down, right? So the day they filed bankruptcy, November 11th, I was on Bloomberg talking about Binance with specific examples of things that I found concerning, well before any of the so-called quote unquote FUD that's coming out now, which is total bullshit, in my opinion, right? I'm not short Binance. I have no personal say in this. I've never shorted any of these tokens. I don't want it to go down. What I'm concerned about is that people are trusting CZ and Binance as if it's a regulated entity that's going to follow the rules and not commingle their funds and not lend them out and not rehypothecate them and not auto-convert them. But we know for sure that they are doing that. So I want to be very clear about that. This is not me hoping it goes down. I'm not shorting it, period. If you just start at the very beginning, there's a company that has no corporate parent that we know of. They won't identify even the name of the corporate entity that actually owns Binance. We have no idea who the shareholders are. We have no idea who the executives are. The only CFO that they've ever had and identified resigned suddenly in June of 2021, shortly after 3AC, Celsius, and BlockFi got trapped in the grayscale trade and became technically insolvent, in my view, at that time, 18 months ago. This is one of the things that people just don't understand. These companies can be insolvent for a year or two, walking zombie companies, and you will have no idea. And so that's continuing now with Crypto.com and others that are clearly insolvent and behaving that way. Binance has over $50 billion of of capital from investors, and they've never done even a basic financial audit. The partial proof of reserve report with Mazars, which was withdrawn, demonstrated very clearly that they commingle funds, right? That they lend out funds. They've lent out more than 20,000 Bitcoin, and that's just what they want you to see. Because remember, customers could believe they have 600,000 Bitcoin at Binance, and you'll never know that. The only person who knows that is CZ. The CFO should have known that, but as Reuters reported this week, the CFO never had access to the full books. So here's a company that every time they get sort of pushed back on in terms of their lack of regulation and their lack of controls internally, et cetera, they just move domiciles, and they've domicile hopped multiple times. Over time, more and more of their reserves have been denominated in BNB, BUSD, and Tether, right? And so what's happening is more and more they're auto-converting deposits into, can somebody mute, please, unless you have something to say? And if you're gonna interrupt me, I'm just gonna leave, because I'm not gonna join a space where people have a low-level conversation that interrupt. So now we're clear that there's money laundering and potential terrorist financing going on. The DOJ is likely to file some criminal indictments around that. We also have proof now that on chain there are wallet addresses where there was no transactions. We have proof that the Binance reserves that are stated on their website are not factual, because there are reserves that Binance has in BNB that they've never reported. The dirty bubble media stuff is fantastic because it confirms something that I believe for more than 6 months, which is that Binance US is simply a shadow front for what is essentially a criminal offshore organization. The balance sheet is not as solid as people think, because most of it, again, is denominated in coins like BNB that are essentially an air token. If you look at the chart of BNB from when it went from 20 to 400, there was almost no volume in that period. And more proof is coming out now that there is active manipulation of that token price, which makes a lot of sense. So look, I'm not the reason why 8 or 10 or $12 billion came out of Binance. What happened is that professional investors and people who are smart looked at the audit and said, holy shit, this is a company that's commingling, lending out, auto-converting, rehypothecating assets, probably doesn't have all the assets, and there's a good chance it's going to go down. Now, one last thing I want to say on this, which is simply that if you saw this same fact pattern, Mario, for any other company in any other industry, if I talk to you about a trucking company or a candy company or an insurance company, and I said, hey, they have no executives, right? There's just a shadow founder who has no location. There's no corporate parent. There's no audit, right? There's no investors. And then I told you, what do you think about this company? Any good investor, right? Anybody with any real experience in investing would know right away that it's a possible fraud. So it's not so much that we know for sure that Binance is going to go down. It's that there are enough red flags that you would be idiotic to leave any capital there, because there's a very high chance that it goes down at some point.
All right. Jesus. First, Mike,
also, we
pleasure
got
to meet you.
Dirty Bubble Media, by the way, said he's going to join.
Oh,
but by the way,
okay.
Mike, that was spot on, by the way, Mike. Thank you for that.
Yeah, that was first, Mike, man, you've got a hell of a personality. But that was really well articulated. And I wrote a list of the concerns. Let me know if I missed anything, Mike, because I want to address them all, go through them throughout the show. As you can see, I've changed the title of the room because I really want to dig into this. That's a lot more concerning than I thought. So first, I have a question for you, Mike, before I summarize the points you've made. When did you start ringing the alarm on Binance?
So the first time that you'll be able to see is the week that Binance and FTX were doing the little dance where they were yelling at each other, and then all of a sudden the next morning, FTX, said they were going to be acquired by Binance. I found that entire exchange highly suspicious, given the fact that they appeared to hate each other. The only reason they would have agreed to a shotgun wedding like that is if there were severe problems in both organizations. And that's where people are, level 1 thinkers believe that the only problems are at FTX. Level 2 and 3 thinkers are looking at the entire ecosystem right now and realizing there's not enough real liquidity. So the reason why Binance is doing an exchange coordination with Tether and Huobi and FTX, they're all in a Telegram group sharing intel and sharing capital essentially, and essentially sharing a balance sheet across all those firms, is there's not enough capital in the ecosystem, period. Right? So the reason why FTX wanted the Voyager assets, and the reason why they called the Committee for U.S. investment in U.S. assets and got them all concerned to try to block Binance, is they needed that liquidity. They wanted to take all the Binance and all the BlockFi customers, convert them to FTX accounts. What is Binance doing now? They're doing the fucking same thing because they don't have enough liquidity. And it's a big game. The bigger you get, the more you can hide in solvency. So when Binance Smart Chain was hacked for $500 million, where do you think that money came from to plug the hole? When Binance puts $500 million of their own capital into Twitter as an investment, where do you think that capital came from? If you just start adding up all of the missing capital from the balance sheet, and then you realize that they also did a deal with FTT, which CZ claims he had no idea that there was still 500 million. Oh, he just discovered it, and then he used that to take FTX down. That week, that day, Monday, Tuesday, Wednesday of that week, if you were not clear that Binance had severe issues, then I don't know what to say to you. Like, you're just not paying attention.
Okay, so I've got a few questions now. I know we've got a lot of panelists, and there's a lot of very important points we need to cover here. So what I'd like to do is go through point by point. If you have more things to add, positive or negative, do write them down, because I think it's important we go through everything. And Catskill, I saw you unmute as well, so we'll go through the other speakers in a bit. Yeah. I know you do, man. I know, because Mike is echoing a lot of things you've said over the last few, since the FTX implosion. So that's why I invited you to the panel. Mike, I want to just summarize the points you made very briefly to make sure I don't miss anything. You did say there is commingling of funds and lending out of a lot of funds. That's number one. Number two, you did say that there's no audit, another important point. Another one would be the CFO said that they never had full access to the books. Binance reserves on the website is inaccurate. Binance US is a shadow front of you mentioned the word criminal organization, which I don't know, I think it's a bit of a too extreme of a term. You also mentioned crypto.com is insolvent, and other exchanges, so I want to touch on that. Then you mentioned there's exchange coordination between all these various top exchanges sharing the balance sheet because there isn't enough liquidity. And I want to kind of ask you whether that links to the Gate and crypto.com quote unquote mistake that got us really concerned.
That's exactly what I said on Scott Melker's podcast last week, is that is a clear sign. Crypto.com and Gate, their coordination is exactly what Justin Sun, by the way, Justin Sun is the shadow owner of Huobi. When he says he's putting money on Binance and Tether's doing the same thing, they're doing that to protect the shared balance sheet, because if one or more of those larger firms becomes insolvent, it reveals that everybody's insolvent. That's why CZ is scrambling right now, because he knew once he realized FTX was fully insolvent, he knew that was going to put pressure back on all of those other firms. So yes, okay. That's 100% correct.
So did I miss any point, or I've gone through them pretty well?
You missed that they have no corporate parent. They won't identify the name of the company that actually owns Binance. That's a freaking huge red flag, and only an ostrich with their head up their own ass or in the sand would not see that. It's so fucking obvious.
And why are they disclosing it? Like, what's the reason they're giving? So just trying
they said, the Patrick Hillman, their chief strategy officer, said in a report a week or two ago, he said that the reason was that they've been embarked on an 18-month corporate reorganization. But I can just tell you, Mario, from experience, I've run many companies, I'm on public boards, that's fucking bullshit. It takes a week or two to establish a corporate parent. That's it, right? Not 18 months. The only reason they're not doing that is that would force CZ to fully elaborate on the structure of his organization, the ownership, where the capital's coming from, et cetera. He doesn't want to do that. And another thing, by the way, that you missed, you said FTX is different. I would argue that's false, right? And the reason is that obviously in the FTX case, we knew that Alameda existed. And by the way, a lot of smart people knew that Alameda was essentially most of the FTX volume in the early years, right? And a lot of hedge funds actively avoided it because they didn't want to be hunted by Alameda on the FTX exchange. CZ is admitted to being the majority shareholder of several large market makers that are unnamed and unaccounted for. So within the broader Binance group, there's 90 plus corporate entities. FTX had 120 plus corporate entities, of which the vast majority filed for bankruptcy at the same time on November 11th. Binance has done the exact same thing. There's 90 plus corporate entities, but they haven't identified the corporate parent. And that goes along with no domicile. You missed that. And no domicile is really important, because if you don't want to be held accountable if and when you collapse, the best thing to do is what Three Arrows did, right? Which is basically live in an area where you can disappear from quickly, where there's nobody who can hold you accountable. You don't even have to show up for the liquidation hearings. You can just be surfing in the fucking, surf spots in Bali, which is what Kyle and Suzu are doing right now. So why do you think CZ is doing that? Exact same way. If Binance were to go down at some point, CZ will be surfing with them.
So you showed concerns around pretty much all the exchanges. Would you say Kraken and Coinbase being domiciled in the US are exceptions?
Well, that's not the reason. It's not because they're domiciled in the US, although that is helpful. The primary reason is because of intense regulation. They have to hold the assets one-to-one, and they haven't been allowed to lend. So they're not rehypothecating, they're not auto-converting, right? The biggest red flag at Binance, beyond all the things I said, is that they take every dollar that comes in. Remember, everything is denominated in Binance and shitcoins. So they accept deposits in thousands of different coins. If you put money into Kraken or Coinbase in the US, typically you're putting in US dollars, right? And so then you're sort of connected to the US banking system and the US regulatory apparatus. And that's prevented a lot of the worst behaviors. It's not a fail safe, right? Like there were huge frauds like Madoff and Enron, et cetera, that have operated. But in general, on average, the outcomes are better when there's an intense level of regulation and scrutiny.
Okay, so we have
And Mario,
dirty...
one other thing you missed. There's no corporate governance that we know of at Binance. There's no board of directors. Again, having a board of directors is not by itself a fail-safe. But if you look at FTX, they had a fake board of directors. They had a board of directors with no outside investors, no oversight. And in my experience, no oversight usually leads to the worst behavior. And by the there's like 20 or 30 more things, but I'll just leave it there for now.
Okay, so we have the pleasure of also having Dirty Bubble Media on stage, and I know a lot of panelists have their hand up. Simon and Alex, and Umbrella, I do need you to, and anyone else, do need you also to play the other side of the argument on many of those points. And I know, Simon, a lot of times you and Alex are like the voice of reason, and Umbrella. So it'd be good to make sure that we go through each point objectively. But I want to go to Dirty Bubble Media before we go to Catskill, just to kind of go through the concerns. Mike, so I'm just going to call you Burgersberg, or because we got two mics. So Mike B, have you heard the concerns that Mike Alfred made?
Yes, I've heard those concerns, and I largely share those concerns.
All right. And is there anything else you'd want to add before I go to Catskill? So I don't know if you've heard all of them or if you want me to summarize them for you, and if there's anything that you think we missed to kind of address them.
So what I would like to just briefly discuss, since you guys invited me to join the space, is just discuss the recent work that I did publish. I think it looks like it's been shared here regarding specifically the role of Binance US in this kind of corporate mess. And, what I discovered was that it appears that they are commingling assets between the US domiciled Binance US, which has been ostensibly a separate entity this entire time, and is sending apparently billions of dollars between the two firms. And additionally, it appears that Binance US needs to withdraw funds from the main Binance exchange in order to pay back customers. And the issue here is not, I'm not making a claim. A lot of people were saying, well, that doesn't mean Binance is insolvent. I'm not making the claim that they're insolvent. I'm making the claim that they've clearly established this company as a way to try to get around US regulators and do business in the United States, despite being banned here. And that they are going to have serious regulatory problems if it turns out that my analysis is true, and that essentially US customer assets are actually being traded on the offshore Binance exchange.
Okay, so I've got a question for you. Mike Alfred, you implied the allegation that Binance is potentially insolvent by saying that there isn't enough liquidity for all these exchanges. Is that correct?
So I actually think that the shutdown of the USDC withdrawals, the running out of Cardano recently, the running out of Tether and the US entity are all early signs of insolvencies, because essentially they may have an aggregate 50 billion in assets. They just don't have all of the coins in the right denominations. If there's enough of a demand for USDC or Tether, right, or Bitcoin, and they've redenominated those people into BUSD or BNB or any of the other coins, particularly the coins that they've homegrown and self-issued, then there's a really real chance that there's going to be rolling periods of insolvency, and we already see that. So it's like if you're going to blame the USDC issue last week on US banking regulation, like that's fine, you could do that, but the reality is they don't have the coins. If they had the coins, they would just give them back to you. So I actually believe they're already on a rolling basis insolvent.
Okay, so the $50 billion in assets, don't we have a breakdown of what these assets are held in?
Yeah, but we don't have a breakdown of liabilities. That's the whole point. The point is you can put a number on a screen. Celsius did this. People still thought they were getting their weekly rewards even after they shut withdrawals because they didn't have all the capital. So you can tell the customers in aggregate they have $8 billion of Bitcoin or $12 billion of Bitcoin, right? But if you actually only have 10 and you told the customers they have 12, then you are hiding liabilities. And so the huge red flag here is that CZ said we have no liabilities. Either he's ignorant, right, or he's actively malicious, because of course they have liabilities. Binance has huge liabilities in the form of all of the coins that all of you put into the platform. And if you don't understand that, then I'm sorry, like you shouldn't be speculating this market.
Do you think he meant that they don't have any loans?
It's what's the difference legally?
No, because I think you implied
no, but listen, legally, when you put your money into any offshore or unregulated lending platform, because that's what Binance is, right? You want to believe it's different because of marketing, but technically and legally, it's exactly the same as FTX and Celsius and BlockFi in a lot of ways, right? So when you put your coins in there, they're just commingling them in a bunch of wallets, and they're redenominating you, and you know that's true because they tell you. They tell you we're taking your USDC and immediately converting it to something totally different, right? So and then we know that they lend out assets because they said it in the Mazars report. Now, putting aside the fact that Mazars was so ashamed of putting a rubber stamp on a potentially fraudulent exchange, like it did clearly prove that Binance admitted that they do in fact do that because their own spokesperson commented on the 21,000 Bitcoin that they lent out. So again, if you put your coins into Binance, you are agreeing to being commingled, you're agreeing to being fractionalized, and you're agreeing to have those assets lent out. That's already proven, and I don't know why the kids, mostly on this website, want to go back and pretend that doesn't happen.
You said it's proven that those funds are being lent out. Can you elaborate on this point?
Yeah, I mean, I just did. All you have to do is look at the Mazars report. They say in the Mazars report, well, hey, we're missing $250 million worth of Bitcoin, but don't worry, we just lent that out to good counterparties. So that's just the tip of the iceberg, because remember, this report it doesn't include liabilities. So we don't know for sure whether that's all of the Bitcoin liabilities that we have. We just know those are their Bitcoin assets. But more importantly, we have no idea what the situation is with USDC or with Tether or with BNB. Because they don't want to obviously give you a proof of reserves for those assets, because that would reveal that there's a whole bunch of fake BNB that they're not even putting on their reserve report. That would reveal that they've lent out a lot of money. They let you lever up against BNB. We know that on the website until very recently, you could borrow a lot of money against BNB. I think you're aware of that, Mario.
Yes. Okay. In the Mazzara report you mentioned, and I know there's a lot of panelists that want to speak, but I think it's important we go through point by point. In the Mazzara's report, you did mention there's $250 million of missing assets. Just to be clear, you're saying that from the assets that need to be backed 1-to-1, there's $250 million discrepancy?
Correct. Yes, and remember, this is a portion of the assets that they self-identify. So this it's like worse than you think, right? It's not. This is all of the liabilities, and we're missing 250 million. These are the liabilities we want to tell you about, and we're still missing money. And the reason is we lent those out to somebody. Right. Now my suspicion is they lent them out to CZ's own market makers, because that's exactly what Crypto.com did. I actually got a note, by the way, I haven't said anything about this publicly yet, but the former head of risk at Crypto.com, who resigned in the last few months, messaged me directly and said, listen, Mike, it's worse than you think. Crypto.com lent a ton of user assets to market makers, affiliated market makers that are on the platform, and they all got hosed. And so that's where a lot of the losses come from. Because when you try to incentivize liquidity on your exchange using the customer assets, and then those liquidity providers, those market makers lose money, then effectively you become increasingly insolvent, and the customers have less and less ownership of the assets that remain.
Jesus, man. Far out. Okay. I want to go to Catskill. One last point though, Mike, and I want you to please, if you can stay on stage, because these are very important points that I really want to dig into. And anyone in the audience that knows any information that can add on to this, you can share it with us and ask us not to disclose your identity if you want to keep it private, about any exchange. So why wasn't there enough, I haven't heard enough concerns about the $250 million that's missing. I know it's based on the entire assets, it's not a big number, but it is a big number nonetheless. But more importantly, it's, as far as I understand, everything's meant to be held 1-to-1. So even if it's $1 that is not being held 1-to-1, that will be a red flag, let alone $250 million. Just want to confirm one last time. What you're saying is that out of the funds they're supposed to hold, the assets they're meant to hold 1-to-1, the customer assets that everyone, I think CZ said it, and everyone says that Binance holds customer funds 1-to-1. You're saying that the audit report by Mazars confirms that there's $250 million that was not held 1-to-1. Please, I just need to make sure that this is correct.
100% correct. But again, the issue is that this is only the assets they self-identified. So it doesn't mean that that is the extent of it. And again, this is only Bitcoin. They have not provided any analysis of their view of what they think they owe customers as it relates to BNB, BUSD, Tether, USDC. That, by the way, those are going to be the areas where the biggest issues are going to be. And we're already seeing that. They run out of USDC regularly. They're running out of Tether at Binance US. They're sharing the balance sheet across those organizations. As Dirty Bubble pointed out, they've taken a net, call it $500 million out of the US from US customers and sort of shipped it to the exchange. And then the other day they shipped some money back because the US entity ran out of Tether. So yes, 100% they are fractionalizing, they are lending, they are rehypothecating, probably related to CZ's controlled market maker firms that he's already admitted to being a majority shareholder, but refuses to identify, much as he refuses to identify any of the entities within the broader Binance umbrella. And most of them were created, by the way, as regulatory smokescreens in local environments. So if you read any of the Reuters reporting, which has done a good job on this, it points out that all of these little Binance entities around the world, they don't really do anything other than follow basic regulation in that local environment. But each regulator in each environment doesn't have the resources to follow up on what the mothership Binance Corporate does. And again, they don't even know who Binance Corporate is, and none of those local regulatory filings include that information. So the entire smokescreen play requires you to not ask, well, who's behind this shadow front? And so even in the US, the regulators aren't smart enough to realize that they're basically being screwed.
All right, so I'm going to go to other panelists, starting with Catskill. Before I go to you, because I want to get your thoughts on all these, I do want a different perspective on all this. So maybe Sam, Alex, or Simon, or Umbrella, kind of, if you can give me your thoughts on this. Maybe Sam, you can kick it off. There's a lot of points being made, a lot of concerning ones. Which ones concern you? Which ones are less concerning in your opinion, and why?
Okay, so I think it's valid that Mike makes the point, but I think there's a clear bias. So I'm not defending any of these. I just want to bring a little bit of color to the point. So Mazars actually effectively stated that the reason they're pulling out of crypto is that they didn't feel these audits communicated properly to the public the facts, because they were really just proof of reserves, and when they can audit listed companies and things like this, they can do a far more detailed job. So I'm not saying that in defense. I'm just saying that you could take that either way, but Mazars basically said that the reason they're pausing crypto audits is because they don't feel that the public are able to understand the reports, because the scope of them are limited. So again, just take that as you will. Commingling of funds. This is an interesting one. I'm a director of a company that has entities over different countries. Commingling of funds is common and it's legal as long as it's recorded appropriately. You can lend, for example, one subsidiary in the EU can lend a subsidiary. I'm saying specifically from my own experience in the UK, money to cover in the case of Binance US. Obviously, it was to cover withdrawals. There's nothing illegal about that. Now, we can state it in these conversations, and it sounds incredibly concerning if nobody listening actually understands, corporate governance and what is and what isn't illegal and legal. So there's no actual implications that commingling of funds is illegal. The Mazars audit also did state that they were 100%, 101% collateralized. Now, I'm going to hold my hands up here and say, I cannot find the reference to this 250 million, so I'm not saying whether it is or is not a fact. So I'm going to respect Mike in that point to say it would be actually be really helpful to see the evidence of this. I've been trying to have a look now online. I can't find any mention of it. All I can find is that the report that Mazars released said they were 101% collateralized in terms of holdings, and that was across a Bitcoin, BTC, RAB, Ethereum, etc. So these are a few points I want to make. There are many other points I'd like to sort of make on Binance to address stuff that was said towards the beginning that directly compared FTX with Binance. Now again, I think it was covered in a way, but if we assume that Binance is not, if we assume that Binance is solvent. We know that Binance make billions of dollars from trading fees. We know that. We know they have revenue. And if we assume that they're solvent and we look at BNB, so much is being missed in this conversation about BNB and how BNB has its value, why it has fundamental value, how much BNB is, how many billions, tens of billions of dollars of BNB is physically tied up in liquidity pools. So to say that BNB could go the same way as FTX would actually mean that everybody would also have to dive into those liquidity pools, many of which are locked, which hold tens of billions of BNB. So, you know, I respect the opinions. There's been a lot of anti-Binance stuff. I'm trying to, you know, be as balanced as I can to say that there is a counter argument in reality for everything that's been said here. The Mazars audit, it was not damning whatsoever at Binance. I appreciate that it can be concerning that following that audit, which obviously put a great deal of scrutiny on Mazars made this decision to say, you know what, we don't feel that these crypto audits are actually giving the public the information that they need, because, you know, effectively they're probably not very well designed for auditing crypto companies. So they pause that process. Now, I would say it's very likely down to the fact that this was such a high profile audit in terms of crypto, and they felt, you know, this is risky for us to put our name to it. Now, again, that could be deemed as very negative for people, but I just think we need some balance in this conversation. There is, you know, there's also a lot of people who openly supported FTX, and if Binance went down, they would be vindicated right now. You know, a lot of people want Binance to go down because they supported FTX and they don't want to feel responsible. And if the biggest exchange in the world went down, they'd be able to sit back and say, great, the attention's elsewhere now. Binance has gone down. I was publicly supporting FTX, publicly supporting Sam, and now I feel vindicated because, you know, everybody else has lost billions of dollars. I think this run on Binance has been incredibly irresponsible because they're trying to force insolvency on a company that has now survived several weeks that were far greater than what collapsed FTX. So that's another, let's say, evidence on the plus side for Binance, is they had a liquidity run that was bigger than FTX's, and they're still here. And their price is still, last 6 months is still better performing than Bitcoin, for example. So I appreciate you letting me have my little say. I just feel that it's important to
appreciate
debate.
No, of course. Mike, I think the reference to the $250 million, if you can give us a bit more clarity on this, I think it's important, because Sam did say that the report stated that Binance is fully collateralized.
No, and I just posted in the Nest. If you look at the second tweet I posted in the Nest, straight out of the Wall Street Journal, they did a full analysis of everything that's said in there, and quote word for word, Binance didn't meet its 1-to-1 ratio of the reserves to customer assets in US dollar terms. Remember, they shouldn't have done this in the first place. They just tell us how many Bitcoin have been put in, but this is what they did. They said in US dollar terms, based on Bitcoin's price at the time of the report, the liabilities would have been about 9.68 billion, while the assets would have been 9.43 billion, or about 245 million smaller. The spokesperson, Jessica Jung from Binance, said the difference of the missing 21,860 Bitcoins was made up of BTC loans made to customers through the Binance loan program. Again, something that up until now they would have never admitted is there, but is obviously there for CZs, market making firms, and any other friends of the firm. And that the collateral for said loans are not in BTC, but in other currencies. So again, like very clear admission of both things directly from them and directly from the report. And I posted the Wall Street Journal analysis of it in the Nest. So again, people can make up whatever they want, but if they haven't done the work on this, just saying, hey, I don't like it, you know, you must be doing this because you're short, or you must be doing this because you like FTX. Like, no, bullshit. Like, this has nothing to do with any of that. Like, I don't give a shit. I never had an FTX account. I never recommended people use FTX, right? Like, of course not. I didn't recommend that people use Celsius and BlockFi. I told you not to use them 18 months ago. So the other thing I would just say real quick, Mario, is that this argument that because Binance hasn't gone down, it's fine. I'm telling you, that is like blatantly stupid and naive. It doesn't matter whether they go down tomorrow. What matters is, are they doing things that are systematically going to cause the firm to collapse in the future? And therefore, should you mitigate your personal risk?
Things are illegal that aren't illegal here.
That's not what I did. Did I use the word illegal? No, I didn't. I didn't use the word illegal. I didn't use the word illegal. Sorry, I didn't use the word illegal. I'm going to stop you there. It's all recorded. I said that they're rehypothecating and commingling assets. I never said it was illegal. Not once.
Do you understand that many corporations commingle funds all the time?
Of course, that's what Celsius, BlockFi, FTX, Crypto.com, Nexo, that's literally what they're all doing.
I'm talking about every corporation on the planet that has entities in different countries.
I never said it was illegal. I said it was risky. Do you understand the difference? Do you understand the difference?
Why is it risky if the assets are held?
Because there's zero transparency into what they're doing with the assets. So they're representing themselves to consumers as a safe exchange that holds assets 1-to-1 and that has an audit. CZ said audit, transparency. He was fucking lying about both things.
But you do understand that Binance has billions of dollars of their own assets. You do understand that they
I don't care. That's not that's a total red herring. You guys are so good at like these red herrings. It's just fucking vapor.
You're saying there's liabilities here when you have.
I was just going to say, client assets and operational funds have to be separate legally. They can't be commingled.
Yes, and that's why I was concerned in the Mazars report. They use assets that are. So hold on. They use
Alex,
assets.
Just please.
They used assets in the reserve report that were actually from the safe asset fund for users, and then they said, "Oh, never mind. Sorry, that was an incorrect address." So to Simon's direct point, Binance is taking funds that are actually for a specific purpose that are supposed to be separate from client assets, and then accounting for them as client assets. So I'm just going to leave that there. I don't know why everybody wants to be an ostrich on that. There is so much proof of shenanigans here.
And how do we know those aren't Binance US as well? Because they're in the same wallet, and they didn't tell us anything about Binance US in that report. So if they're all in the same wallet and they say that's proof of reserves, and like, I'm just getting started with this whole thing. And honestly, Mike, I couldn't agree with you more. And this is like, for me, this whole thing is like a bunch of crypto bros that don't understand anything about financial markets, anything about corporate governance. No, it's so
Catskill, Alex, quickly, guys. Sorry, just because these are very sensitive points. I know everyone wants to speak, so I'll just put your hand up.
Statements here that are not true. Commingling is not illegal, even with client assets.
I'll tell you
even in regulated finance. I worked in regulated finance for 10 years. It's not illegal. It's illegal when you use those funds for operational purposes. It's illegal when you have any idea what's illegal and what's not. I know this because I worked in financial services for 10 years, guys.
Alex, I'll let you speak in a sec. I know everyone wants to speak, and Catskill, I know you've got more concerns. Just about the particular point, Simon, I'll go to you because we've discussed this a lot, and Alex, I'll go to you as well. I promise. Dan and Amin are waiting as well. But Simon, just about that point, the commingling of funds. What's your take on this? The concerns that Mike and Catskill have.
Yeah, sure. So I reckon the best way of doing this is point by point. But if you want to go into the commingling of funds, so as a regulated institution at Bank to the Future that has different entities in different jurisdictions, client money does not sit on our balance sheet. It's not an item where we say it's our money on our balance sheet. It's a note in it. Because the funds are fully segregated in a different entity. And our operational funds have to be 100% segregated from client funds. And our client funds can never be in a position where we've got, even if it was solvent, say, we owed our clients 10 billion and we had 11 billion of assets. That's a problem because our balance sheet, our segregated client assets says we are holding 6,000 Bitcoin for our clients and 3,000 ETH for our clients and X amount of stable coins for our clients. And those have to match up because if you are taking directional risk, then you're not segregating. So in terms of the word illegal, if you are rehypothecating funds, then you have to have a banking license. If you are holding client funds, then you have to be a regulated custodian. If you are offering returns for investing people's money and pooling that together in a collective investment scheme, then you have to be a regulated securities business. If you are offering loans, then you have to have lending licenses. That is global around the world, whether you're using fiat or crypto. And that is 100%. Every single country has regulations around all of those things, including the Cayman Islands, which I did try to buy some shares in Binance, the parent company, and my understanding it was a Cayman Island company from the investor I was trying to buy them from.
So the concern that Mike is making here and Catskill is echoing, I know Sam wants to jump in, but would you say you share that concern?
Yeah, so again, commingling is maybe just it means different things to different people. So in terms of commingling, custody has to be segregated. If you're selling a security, that has to be segregated. If people are taking their funds and lending it to somebody, in exchange for returns, then that's
so
taking.
The question is, how are they commingling it exactly? Is that what you mean? Like, there's different ways of looking at it.
There's nothing wrong with saying we owe 10,000 clients 10,000 Bitcoin, and you putting them all in one hot wallet, or 9,000 of them in a cold wallet and 1,000 of them in a hot wallet. You could define that as commingling. It doesn't mean you have to segregate it from client to client, but you have to have that in a separate legal entity that says, if my company goes bust, if Bank to the Future goes bust, those funds do not belong to our company, and you can't have a Celsius scenario where we're saying there are funds. That's not legal. You have to have a banking license in order to do that, or you have to sell it as a security. So, and then if you've got different entities across, can you lend from one entity to the other? Yes, you can, your operational funds, but you certainly shouldn't have client funds in one entity that belong to another entity, and that's not something you can do.
Simon, before I go to Sam, how can the report? So what I don't understand, if there's $250 million that was commingled, like moved from one entity to another, how can the report say that Binance is still backing user funds one-to-one? I'm talking the Mazars audit report.
Well, you can't. Well, so firstly, who did they audit?
Mike, do you want to answer that one?
What do you mean? They didn't? It's not an audit. It was a partial proof of reserves report of Binance International, Binance.com. Remember, it's the wallet. It's the funds they identified that are Bitcoin only. They said, here's what we believe our liabilities are for Bitcoin, or these are the reserves that we say we control, right? And then the so-called auditor. Remember, they are an auditor. They're just not doing an audit of Binance.
Yeah. So to say how can that happen? It's because there's multiple entities, and that's not a full audit. It's not an audit of saying, across the entire group, do the assets and liabilities match up? Do they have all the client funds? That's what a company like Coinbase has to do. They offer a lot of different services, and when they say to their institutions, we're offering you a custody service and we've got 2 million Bitcoins, it's not there's like 63,000 different wallets for every client. Is that they have to have 2 million Bitcoins segregated, whereby even if Coinbase goes bust, those clients can have their Bitcoins back. So that's the important part. Now, can you leverage client assets? No, you can't. The client has to say, can you give me my coins back from custody, and can you invest them in a security and give me some yield? And then I need full disclosure on what you're doing with that money, and I need to have qualified myself as a suitable investor, and I need to have complied with all regulations in the jurisdiction that I reside.
So Simon, can I just stop you there? This is exactly what happened at Celsius, right? So people put money into Celsius thinking it was a bank because it was shiny and had nice colors and said, look, it's a safe way to get yield. But it turns out on the back end, all you were doing was lending money to them so they could run a hedge fund. And so my point is not necessarily that Binance committed a crime by doing anything with the customer assets, but it is certainly a misrepresentation of what most people think they're getting when they use Binance. That's the key point.
Well, offering a financial services without being suitably regulated to offer that product is something you can't do, and that's what Celsius did. So Celsius said, we'll pull together money and give you yield, and we will invest that money in a range of different things. That's a security. So when the state regulators knocked on Celsius's door and said, you're offering illegal securities, they said, okay, we'll stop pooling that money together and we'll put it in custody. And so they created a custody service that doesn't pay yield. And then when the regulators said, hey, hold on, you're not regulated, you don't have a license in order to offer custody, they said, oh shit, what should we do with those money? We'll get you to withdraw it, and we'll put in a separate status called withhold.
So Simon, a quick question. Would you say this is, in your opinion, this is a liquidity concern, or more of a regulatory concern, a legal compliance? the commingling of funds that we're talking about now?
Well, regulations are just if you are a licensed entity, and I don't agree that every company that is licensed within the Binance group, the regulator would have, from my experience, no matter where it is, have to have understood the group and who the ultimate beneficial owners are of each of the entities.
But that's already been reported. Sorry, Simon, but that's already been fully vetted and reported. Like Reuters did intense reporting on this, and they pointed out several different jurisdictions where the regulator admitted they had no fucking clue what was going on, and even when they tried to ask, they didn't get any information back. And they looked at actual filings in those countries where Binance obfuscated and wouldn't say. They were able to get licenses because they probably paid somebody off in those jurisdictions. So everything you're saying I agree with, but I think you're missing the point that that's not what Binance actually did. And that's all I want to make sure people understand.
Yeah, but if a journalist reached out to a regulator and asked for information, you wouldn't expect the regulator to give that information. That's not the role of a regulator.
Some of the filings were public. They didn't have to ask. They just looked at the filings, and the filings omitted information that normally would be there for everybody else.
Yeah. So unless the regulator is corrupt or something's going on there, then you would expect the regulator to know that a regulator doing their job would have to understand the entire group structure, and it would be highly irregular if they didn't.
Well, in the US, we know they didn't do that because they did not know that Binance US and Binance were sharing a balance sheet. Otherwise, they wouldn't have been allowed to operate. So, like even in the US, where regulation is pretty consistent and solid, their Binance has gone around that regulatory apparatus. I mean, that's been more than proven now by Dirty Bubble Media and others.
So I want to go to the next point, is the solvency concern, because we've got a lot of points to go through here, and I think this is the most serious point made so far, and that's across multiple exchanges. So can you just refresh for the audience, Mike, and I know Catskill, you're going to jump in. I know a lot of speakers want to jump in, and this will take it. I think this discussion will take time. It's a very, very important discussion. And I'm kind of I changed the title of the space because I don't care about SBF. I don't care about crypto predictions. I think nothing matters relative to what we're discussing now. So there's a list of concerns, Mike. The solvency concern for me is the most important one, because I said in the last space when we did an investigation into Binance, I said, hey, there are some red flags, but we don't have concerns regarding solvency. Can you tell us again, just on that one point, where did that solvency concern arise from? Or just to reconfirm, you do have a concern with the solvency of Binance, and why?
Yeah, so if you just reviewed all of the things that have blown up in crypto over the last year, the solvency issues usually come from a few different places. One obvious one is DeFi hacks. So if you look at Celsius, they lost 75 million or 70 million in Stakehound, 50 million in Badger DAO. Binance lost 500 in BSC, right? You go down the list, almost everybody in this ecosystem has had some sort of large hack. Those are real balance sheet losses that need to be papered over. Loan losses is another one. So like people take deposits from users and they lend them out to someone else. Obviously, that's all that Celsius and BlockFi were doing. Binance has now admitted, at least with Bitcoin, that they do that. And I think most people believe they're doing it with USDC, Tether, and other assets. Crypto.com, of course, is a huge one. And then one of the shadow ways that these firms become insolvent that's less obvious to the casual observer is when these firms take in deposits and redenominate to other assets. So one of the biggest ways that Celsius became insolvent in the spring of 2021 is they were taking in a massive amount of Ethereum deposits, and then they were redenominating them into shitcoins. Alex thought he could outtrade Ethereum by buying second and third and fourth tier coins. And so it turned out later when the customers wanted their Ethereum back, they didn't have all of the Ethereum they originally had because they had auto-converted it, right? They had redenominated it in other assets. So those are the three most obvious areas, all three of which have obviously impacted Binance because Binance is the biggest firm. And I think the exchange coordination information, which I posted in the Nest a tweet about, where Binance is actively sort of collaborating with Tether to try to paper over different areas of illiquidity in their business, and Gate and Crypto.com were doing something similar where Crypto.com sent more than 80% of all of their Ethereum to Gate for a few weeks in November, probably to satisfy short-term liquidity needs and or to satisfy proof of reserve reporting requirements. And so then those assets came back a couple of weeks later, and when the on-chain sleuths found it, Crypto.com put their hands up and said, oh, that was just an accident. But obviously, it's a very clear client sign of technical insolvency, in addition to the fact that they had sent billions of dollars of stablecoins around the ecosystem to other platforms, including FTX, in the year leading up to the collapse of FTX. So I think what's happening is that all of these exchanges have different levels of insolvency, and so they coordinate together to paper over it temporarily when they have liquidity issues. And that's why you're seeing this money grab for Voyager assets, bankruptcy assets. Both FTX and Binance were fighting over those. They were fighting over the BlockFi bankruptcy estate. People are trying to grab whatever real liquidity is there because there's a fundamental insolvency issue that's systemic across the entire ecosystem right now.
I got it. So
and by the way, that comes from rising rates, right? So from a macro standpoint, the rate rising is like a noose around the neck of all of these fractionally reserved platforms because they're able to borrow money and lend money profitably, easily in a lower rate environment. When the rates go up, it systematically impairs that part of the business and makes it impossible for them to remain solvent. And so they're all kind of swimming naked right now. Binance looks the least risky because they have the most assets, not because they're the best risk manager, in my opinion.
Okay. So I just want to offer one clarification. Sam, thanks for sending me this. So the $250 million discrepancy is not in the report. It's something that Wall Street Journal, I think it was, spotted in their calculations. And that's what they included in their report. And I think, Mike, you mentioned that as well. So just a bit of a clarification there for the audience.
And I just want to point out to you, Mario, that it's important to recognize that if that report was as strong as CZ was originally representing it was, then people wouldn't have pulled 10 billion or 11 billion out of the platform, right? Like that's not FUD. That's people doing real analysis of the first amount of data they've ever gotten on the real reserves that Binance has with any sort of reporting around it. And people were freaked out. Right, that's just a factual thing.
It's got nothing to do with influencers saying get your money the hell out of Binance ASAP. You're going to lose all your money.
Yeah,
influencers can't kill. Influencers can't kill companies. No, influencers can't kill companies that are solvent.
I would say yeah. So Sam, we're gonna get to the exactly. I was gonna say the same thing you said, Sam. So in the point of the bank run, it could. I'm not saying it's not backed by legitimate fear, but you see bank runs as well around fear without any facts backing it. So if a lot of people stand and say, hey, get your money off Binance right after FTX, people take their money out. That was my assumption too. But I don't think that discredits the concerns that we have, nor does it legitimize them, in my opinion. So you mentioned 3 points, I'm going to mention 4, about what leads to your solvency concerns with Binance in this case, because I know you started talking about crypto.com, which I noted separately. So you said there's the hack, the BSC hack of, I think it was $500 million. There's loan losses. With what we've seen over the last few months, and then the redominating the assets. I don't know if I said the term correctly, which is
and I missed one thing too, Mario. That is taking liquid deposits and turning them into illiquid assets, which is what FTX did with Alameda Venture, right? And what I believe, because Binance has made a number of, they've invested at least $2 billion in venture companies that could have come out of their own corporate funds, but we don't know for sure because, again, they've provided no reporting on that. And so whenever you redenominate liquid deposits into an illiquid asset, like Celsius did, for example, with the mining business, where they loaned $700 million of customer assets to a business that was fundamentally illiquid, like that also creates liquidity issues. Even if the assets are sort of technically there, they're not available to be released back to the depositors.
Okay. And I'm going to add one more, is that there's the potential $2 billion clawback from the money that's received from FTX based on their investment that was made by I think it was Bloomberg or someone who was interviewing Sam. So I added that to the list as a point of concern. So out of those, if we could just brief Kat, Skill, and Mike, out of those 4, 1, 2, 3, 4, which ones are confirmed 100%? So we know the hack, the BSC hack, is confirmed 100%. We do know there's 3 others.
Sorry, Mario, just adding context to the hack, Binance did recover most of those funds. So they did freeze most of those funds. So the total loss to them wasn't, I think it was 580 million total hack, but the loss to them was, I think, between only 50 and 80 million.
Okay, thanks for that.
Keep in mind that they paused the chain to do that, though. So anyone that wants to say that BNB chain is not heavily run by Binance.
That's a separate discussion, but it's a valid point as well. So we got
they
3
tried
others.
to reverse Bitcoin. Sorry to distract.
Okay, so we got to go back to the 3 other points. It's like there's all these pain points over the years that are just coming out now. So there's 3 other points that would concern me if they're confirmed 100%. So are these valid concerns or confirmed facts? And I'll tell you what these three are. Kat, Skill, and Mike. I'll go through one by one, and then we'll get other panelists to comment on them. So panelists, just put your hand up if you want to comment on these points. If you want to mention completely separate points, we'll do that a bit later. So Dallas, Amin, just put your hand up if that's, and anyone else, if you want to comment on these points, the solvency concerns and the points we're about to go through. So number one is loan losses. Is that confirmed 100%? And do we have a number on that, Mike or Catskill? Guys?
I don't have any info on that.
Mike, is that confirmed 100% the loan losses, or is that just a valid concern?
Sorry, guys, I had a phone call coming in from one of the angry hedge fund managers. That's why I couldn't respond. Yes.
Okay. Just block them for now. I'll get back to you in a bit.
So we don't know for. So here's the thing, right? In a rising rate environment where there's fundamental insolvency in a bunch of places, and you have companies like FTX going down. If anybody has lent a lot of money, including Genesis, right, including Celsius, including anyone who's made loans, is going to have losses. That's just the nature of the business. So we can't confirm because they don't report their loan losses, but we know for sure they do lending. And so it's inevitable they have some losses. We just don't know the extent. Because again, we only know they've lent Bitcoin. We don't know how much USDC, Tether, and other assets they've lent out, BNB, et cetera. So I would say that that's confirmed in the sense that we know they lend. And in an environment like we're in now, for sure they've had losses. We just don't know the size. So I wouldn't put that at the top of my list, but I would definitely call it out.
I'd put it as a valid concern considering market conditions, because we don't know the exact amount and how much that would impact their solvency. Simon, did you want to comment on that, the loan losses? Yeah, go ahead.
Yeah, I mean, I don't know about loan losses, but we know they lend, because if you go into Binance right now and want to receive yield, then they'll match you up with somebody that's paying that yield.
We just don't know the amount that they've lent out, correct?
Well, I think it's to Mike's point that everyone makes lending losses. And if this was a securities, you would have received a report saying that these loans went bad and therefore we've had to take this hit and these ones went well. So if they're running it as a bank, this is exactly why banks have to report all of their lending activities, lending losses, and stress tests.
Understood. And then we go back to regulatory concern. Dallas, go ahead on the lending aspect. Go ahead.
Yeah, exactly. I think, short answer is we need more info, but like the important point, that I think is worth making a distinction on is it depends on the terms of these loans, because a lot of the other examples you guys made, these are companies giving kind of good faith loans that are under collateralized to market makers because they're hey, we trust them, they're big. Whereas, you know what I mean? Any of the lending happening on Binance, typically, right? It's either going to be over collateralized or it's going to be people borrowing on margin, but they have liquidation prices for that. So
I agree.
Could be similar, but it could be very different depending on.
I agree. So I think we need more clarity on those loans before, to see how concerning it is, but it's definitely a question worth asking. I'll go to the next one. Is the assets are redominated? Was that the term you were using?
Redenominated. They're
auto-converting
deposits into other assets. So they're, for example, this is 100% proven, Mario, because they'll tell you this when you sign up for an account and deposit. But if you put in USDC, they auto-convert to BUSD.
Yeah, but we just don't know. Okay, yeah, but that's not a concern. The concern will be if redenominated in a shitcoin or a more illiquid asset, which goes on to your other point. I kind of put them together. The redenomination of assets is concerning. It depends on what other asset they're redenominating it to. Would you agree?
I think it is a concern. I think that this whole BUSD is a Paxos product, is sort of a smokescreen for the broader issue of them redenominating more and more of the reserves into their own issued coins and Tether over time. That's why 70% of all of their reserves are in those assets. So they didn't do that accidentally, right? They want to have full control. They want to be able to self-issue most of the assets that their liabilities are denominated in. That's a very clear sign of distress. All of the companies that went bust so far had their own self-issued tokens, which they mostly used to bolster their own balance sheet. FTX did it with FTT. Celsius did it with Cell. Celsius primarily used it to cover over their losses.
They don't issue BUSD that's issued by Paxos.
Yeah, but they also have a separate BUSD that they can issue and wrap on Avalanche and Binance Smart Chain.
Mike, I put a reply to you and Magoo about this point specifically. they, I mean, at least this is what they say, and this is trackable on chain, which is like any BUSD that's minted on BSC, for example, can't be minted unless it's backed by BUSD sitting on ETH, which is issued by Paxos. And if you look at the contracts, like I can share the link, you could see there's a lot more BUSD in the ETH side than there is on the BSC side. So there's no real evidence I can find that like proves that they're somehow minting beyond the backing on a different chain.
Dallas. So my problem with that is that when they auto convert, they're converting out of thin air, and that is the literal definition of fraud. So if you send USDC to Binance and they say, oh, now it's BUSD, they didn't convert that USDC to dollars and then send it to their bank and then buy BUSD right away. So to me, that's the most massive red flag, and it's just complete and total fraud.
Are they not buying it like 1-to-1 on the market on Binance?
No.
If they were, they can't do it that fast. They can't do it that fast. And
They did
it's not.
originally. They did, one second,
They can't do it that fast unless they're holding it. Unless they're holding the assets, they can't do it that fast. It just doesn't. It doesn't work like that. On chain and Dallas. One last point, and Alex, I'll let you speak. On chain and off chain, they're not showing us any data. We can't verify that. So Dallas, that's my big issue with that. You're right in what you're saying, and I've also read that. And Paxos says that, that everything's verified. But how does Paxos know, and how do the regulators know when you send USDC or USDT to the exchange and they convert it to BUSD? There's no way to tell if that's fake or real. And this is my big problem. And I'll wait till Mario lets me talk about this. But having a centralized exchange with the front end software is a license to cheat and steal, and 99% of them are doing it. And I'll let Alex go.
Thank you. I appreciate it. So first, the one thing I want to clarify is there are bad actors everywhere. That doesn't mean that blockchain is bad. I feel like it's so easy to merge this into, everybody is bad and evil, and that is not true. This one point, and there are many points that can contradict other statements, but for this one point that I will confine myself to, the issue with the BUSD was they did a sweep a few months ago where they literally booted off all of the other, like Tether and every other stablecoin. They booted everything off and then just reissued it in BUSD, which is why you see that all over the place as issued. But the problem is literally what Catskill was saying is that they didn't cash out those coins and then put the money from the cash out into BUSD and then issue it that way. It's not a one-to-one step translation. The only time you do a one-to-one step translation between a stable coin and crypto is when you do literally, it's just a stable coin buying a crypto and buying a non-stable coin thing. But for stable coins, because of the way that most of them are backed, you actually have to cash out and redeposit for them to ensure that the backing from one place, right, transfers to the backing of the new stable coin.
Is it Alex? Is that for more regulatory compliance, or you're talking about just pure backing, one-to-one backing?
That's because of how these particular coins maintain their value. But
Alex, it goes deeper. And I want to get your point on this too. It goes deeper, and Mike can hit on this too. If they actually had the actual BUSD, why doesn't the rest of their exchange network with Huobi and KuCoin and Gate, then why couldn't they just send them the BUSD and get USDC back in a minute or 5 minutes and then distribute that to their customers? It's because nobody wants their shit coins, or they don't exist in reality. That's the real truth. He shouldn't ever have to wait for a bank to open, because these other exchanges, if they're all working together on this liquidity deal, they would be able to take that BUSD, or they could facilitate that immediately, but they're not, and they didn't, which means there's a problem.
I think it's always scary, though. I think that's a really good point, but I think it's always scary to speculate on motives for somebody. I don't know why someone does or doesn't do something, but I do know that if they're not, so I don't ever look at Huobi and OKX and say those are exchanges I want to model after personally, right? Those are.
But Alex, if you needed USDC and you had USDT, you should be able to call up your friends at the next exchange and say, hey, we're running short on this. we allow people to withdraw in any stable token. So can we just send you USDT and you send us USDC, and they could do the swap right there? That's what that exchange
So you're
network is
concerned,
for.
Catskill, you're concerned, just to clarify for the audience, you're concerned that the delays in that swap from one stable coin to another?
Yes, because if there's an exchange network where they are swapping, and we know this, that they're doing that. If you have value, that's something of real value, somebody else should be able to, in the exchange network, they should be able to move that and get the USDC to cover it if they really had the BUSD on hand. And that's why they were trying to say it just doesn't make sense, that delay.
But that could create an imbalance at someone like Huobi, especially if it's a huge amount of USDC.
Yeah. Well, you can't. I mean, you can't just that doesn't end the transaction. You can't have Tether backed by BUSD, right? And say, well, somewhere around there is the fiat version, because they have fiat reserves. Somewhere out there is the fiat version, but we're backing Tether by BUSD, and then you have to go track the BUSD to cash it out wherever the BUSD is actually being backed by USDC. That crashes the system. Now look, none of these stable coins are going to last. I talk about this all the time, right? This is a big issue because stable coins right now are designed terribly because they don't understand economics, but they do work for the purposes of the very short-term transactions they tend to work in. But you still have to do a cash out in order to put it into another stable coin. That is you have to actually take, if I have something representing dollars, and I want to get it into Swiss francs, right? I have to cash out my thing into dollars and then turn the dollars into Swiss francs. Swiss francs can use my dollars as backing, but they can't use my representation of dollars as backing. So you do this thing. When they're not doing it, that's problematic. That is what was the flag, in my opinion, on this particular part of Binance. The flag part was that they were just doing these flat exchanges, as opposed to saying, okay, we're going to cash those out. We'll do it for you, right? We'll cash it out and give you BUSD. We'll take on the exchange. We're not going to make you cash it out and then buy BUSD. We're going to cash out all of it for you and buy BUSD and give it to you. Okay. They didn't do that.
Okay, so the concern here, just for the audience to understand, because we're going through points, just for everyone to stay on track, we're going through points on the solvency of Binance, which so far, Mike, I'm still don't have enough to be concerned, but obviously that could change as we continue this discussion, because the hack is relatively limited to 50 to 80 million. The loan losses, we just don't have clarity. I'm not saying there's definitely room to be concerned and to ask questions, and there's other concerns which are more valid than the solvency concerns. But from the loans perspective, we just don't have a number and the terms, etc., for it to be enough to say, hey, they've got solvency issues, or they're very likely to have solvency issues. The stable coin discussion is, I think that we're speculating on the reason why it's taking him a while to swap one stable coin to another. Now, whether it's legal the way they're doing it or not, that's a different discussion. But do they have a one-to-one backing? The delay, for example, if they're working with Huobi, they're like, hey, Huobi, we need, $100 million worth or $1 billion worth of USDT. We have to understand Binance's size relative to all other exchanges. Like the monopoly is insane, and that's again a different discussion. So that would be my concern there. I see Dallas and Sam are putting 100% emoji. So I think that's like the other argument of this. So I would put it in the category of again, room to be concerned, ask questions, and goes back to we need more transparency, more clarity. And until then, I don't think we should stop asking those questions. But I wouldn't put it in the same boat as
Mario, I think the issue is where there's smoke, there's fire, and that's what both Mike and I are saying.
I would say
maybe they're not 100% insolvent, but the issue is there's so many places where it looks like they're cheating and stealing and manipulating, and that should be all anybody needs to know. And at some point, they're going to get caught, and I think that's what Mike's saying, and that's what I'm saying. And so the point is, and I know a lot of people. I'm not short Binance. And I never had an account at FTX, and I don't care about them. The point is that they're lying, cheating, stealing, and manipulating, and it's super obvious to people that have financial experience. And so that's the problem that I think we're bringing up, and it's honestly it's so rampant and widespread. And so the thing is do you continue to trust that they're not going to screw up like Sam? And honestly, to me, there is zero difference between FTX and Binance. Binance just hasn't gotten caught with their pants down yet. And at some point, if they keep doing it, they're going to screw up.
Speaking of Sam, by the way,
So
he
guys,
just got released that $250 million bail.
So guys, it is very important. Just please put your hand up. I had like 3 people speak, and then we can go to you because again, it's a very sensitive discussion. So yeah, I got the breaking news, Alex. Yeah, so Sam is walking free on bail, not walking free, but he's out on bail for I think it's $250 million bail, and they used his parents' property for that. Is that correct, Alex?
Yeah, that's what I saw. I just wanted to get it on your radar.
Yeah. I got it sent as well. Yeah, I don't really care. I think we'll just see what happens afterwards, bail or no bail. He's in the US. He's not going to get out of the US. All right. Yeah, Alex, I want to move on to the next point. So I'm just going because there's so many points to make. Go ahead.
I know, but before you do, I just want to caution in general about what happens when we take speculation or even reasoned concern and say, well, that's all you need to know, or something like, well, there's smoke, so there's fire. That's not the same thing. I really worry about this just because not just in this area, but in general, we all seem to start drawing conclusions based on speculation and our own concerns.
I don't, Alex. It's a valid point, and what you're saying is that where there's smoke, there's fire. Not always. It's just, I think what Catskill means, like, we should ask the questions, we should put the pressure, and we're kind of doing that here. I also want to point out something that me and Simon and other panelists have said in previous spaces. When CZ came here, when Jesse from Kraken came here, and other exchanges, we had Gabriel Abed come here, they said the same thing. They said, hey, exchanges should not worry if we all run and take our money out of Binance. They shouldn't worry because the funds should be backed 1-to-1. So we even said, to an extent, we said, like, Binance should thank us because they have to hold less assets. So it's actually a good thing. So I think that as long as we, when there's an exchange that comes on the show and is worried, like, hey, like, you shouldn't worry, don't take your assets, everything's fine. Like, you see that level of concern, then that, for me, that would be more concerning, rather than them sitting quietly and letting us ask our questions. But that doesn't mean that we shouldn't get more clarity.
SBF sat like a cucumber, ice cold, until it went down, and both he and Caroline said nothing was wrong. But
exactly. That's the other point.
What they say.
Exactly. Like, if an exchange is not saying a thing, it also doesn't mean that they're fine. It just they know that this is the right thing to do, and they know that we'll be more concerned once they start kind of fighting against the FUD. But what I'm saying is that if everyone takes their money out, we're not doing a bad thing. We're not hurting Binance, because Binance is not a bank. We're not hurting Crypto.com. We're not hurting Gate. And if we do hurt them, that means they're not holding funds 1-to-1, and luckily we kind of bring them down. Exactly.
Bingo. Mari, I got to drop off here in a second, so I just want to say thanks for having me. And the last 2 points you were going to make, one is venture investments, where you take liquid deposits and put them into liquid companies. We know for sure Binance does that. And then the $2 billion coming from FTX that could potentially be clawed back. Like, of course they don't have $2 billion of cash. They have $2 billion. They have $2 billion of crap.
I know. So I either speak, Dallas. I'll let you speak after, because I know Mike has to jump off. So I wrote down the points. So
Dallas, I've actually got a point that I'd like to raise with Mike before he goes. Actually, I've been waiting for a while to raise it.
Go ahead. Yeah, go ahead, man.
Because I've got to bounce for dinner in a minute as well. Otherwise, I'll be in trouble with the real boss. So I think there's like a bit of a logical perspective here that maybe is being missed, or that I don't know, but it just isn't being talked about. So, like, obviously, SBF, CZ, they had a conversation. CZ made those Twitter posts where he was like, making a deal with SBF and FTX and stuff. And I granted, CZ was the guy who kind of gave the dominoes the final shove, I guess, for the collapse of FTX. But what I don't understand is when he did that, that struck me as a very strategic business decision. He is a threat to my to my dominance in this space. He did his due diligence. He's seen, the state of what FTX was doing, probably already knew beforehand, heard things on the wire and stuff. And if he's doing that due diligence and Binance are performing the same questionable actions as FTX was, then why would CZ even go out on public record to say that there's potentially a deal here? And why would he kick the legs from underneath? That's kind of like, I've murdered somebody, my friend's murdered somebody, and I go to the cops and dub my friend in, right? It doesn't make sense to me why you would have that circus when you're just as guilty.
That's exactly the right angle and the right thread to pull on, and this is why I'm so certain that something's wrong, but not for the reasons that you said. How I read it, and right in that week as it was happening, how I read it was, here's two guys that were functionally operating businesses in a very similar way, knew it, were competing for, again, scarce real assets in this sort of fairy tale unicorn environment of all kinds of bullshit assets that aren't actually worth anything if they're sold, right? Because most of these assets, this is the dirty little secret, like the real crypto market cap is like 80% less than it is now. Because if you actually went to try to sell any large size of BNB, or essentially anything beyond Bitcoin, you would find out that there's no bid for most of these assets. So they're marked on the balance sheet of these companies as real assets, but they're not really there. So what happened was CZ said, fuck you, SBF, you're trying to short Tether. You see that in the Telegram chat. Says, fuck you, you're going to the US and you're trying to lobby against me. I'm going to punch you back right in the mouth. But when he did that, he didn't actually expect SBF to go down right away. He actually overestimated SBF. And so the only reason why he agreed to do a deal, which was a shotgun deal, was because he saw the light at the end of the tunnel of the train coming. And he realized that if SBF goes down, all the scrutiny is going to go back to Binance, because effectively Binance, Crypto.com, Nexo, Huobi, Gate, Bitfinex, Tether are all doing the same things. They're all doing the same trades. They're all not transparent. They all don't have all the assets. They're all fractionally reserved. They're all doing lending. And so he knew that if SBF actually went down, he didn't think he would go down, that everybody was sort of fucked. And that's why CZ went on an AMA just a week ago and told the audience that the next 3 months are going to be terrible for Binance. Why do you think he's doing that? He is conditioning the market for the things that he already knows are coming. If you don't want to listen to CZ directly, I don't know how to help you, because he's literally warning you that criminal indictments are coming, liquidity issues are coming, additional scrutiny from law enforcement because of his relationship with SBF is coming. SBF could probably turn and commit some evidence against Tether and Binance. Whatever he knows, he'll probably offer to prosecutors. So it is going to be a rough 3 months. CZ is literally telling you that. And again, I don't think he expected SBF to go down, and that is exactly the right question to ask.
But if he'd have done the deal, right, wouldn't that put him in just as much a position of power as SBF, FTX failing anyway? So
you want to know? Why I can't do the deal is because he looked at the balance sheet and he said, "Wow, we have holes in our balance sheet, but your balance sheet hole is much bigger than ours. You've committed way more fraud than we have. I cannot add more problems to the soup of fraud and money laundering and regulatory concerns that already exist in my business. I know that shit's coming."
Dan is saying that if he did do the deal, wouldn't he also still be the biggest shark in the pool and have the same spotlight? But he didn't do the deal because of those things you said. But like, the point is, like, would he have done the deal if the balance sheet wasn't as much of a disaster as it was? Do you think he would have actually gone through with it?
Of course, if they actually had most of the assets, right, but they were just illiquid, of course he would have done the deal because he didn't want any of the scrutiny, right? Like,
so you think that his strategic decision changed from trying to do the deal, absorb FTX, and gain the power that way, to this thing's screwed, kick the legs from underneath him, and try and ride out the pain?
No, the opposite. I think he thought he was just punching back at SBF for all the bullshit that SBF pulled on him, which was legitimate. And then he was surprised at how quickly FTX actually went down. So he did a trigger. He had a moment of like, holy shit, this whole space is a massive Ponzi and it's going to collapse on my own head too. I need to do something to stem the fear and the panic. But then he couldn't, because he realized the problem was even bigger than he suspected. CZ's not dumb. He knows there's systematic insolvency in these other firms. He knows that. That's why they're coordinating. He's trying to hold up firms. Huobi knows that too. Justin Sun knows that he'll go down if CZ goes down. Tether knows that they'll go down if Binance goes down, and CZ knows that he'll go down if Tether goes down. Literally, all these dependencies are there.
I have. So you're concerned about.
Just for the record, I'm neither a fan or a hater of exchanges. I'm kind of as in the middle as you can get, because I don't particularly like them, but at the same time, I understand the utility. So if you want
Mike,
middle ground, I'm your man.
I appreciate it, Dan. And Mike, I have one kind of final question from my end. So the point you just made is like there's such a systematic issue in the space that they're all supporting each other because they all know they messed up in one way or another, and they all have holes in their balance sheets. So we're kind of seeing 08 again, what happened in 2008, the global financial crisis within crypto and without a government to bail out the guys that are too big to fail. Now, I want to ask you a question though, is would you like, are you trying to say like, hey, there are concerns within Binance, there is smoke there, we need more clarity, there's definitely things they did wrong, but I don't think they're gonna go under or gonna face solvency issues later on? Or are you going all the way, and I think you would put your money that hey, they will face solvency issues and they might not be here 5 years from now? Where would your stance be? Because I know you've been really aggressively pointing out your concerns, but I want to know where your stance is, whether you're somewhere in the middle.
Yeah, so I've been very clear about this. I'm not rooting for them to go down. I'm not short, and I don't want them to go down. I don't think they're going to go down tomorrow because, again, there's $50 billion of sort of proven assets. We don't know who those assets belong to. We don't know what the liabilities behind those assets are. But I'm very convinced, based on the pattern, the fact pattern, again, the no domicile, the no audit, the no CFO, the no corporate parent, right? The lending, the systematic redenomination, et cetera, right? You can go on and on and on. I could give you a list of 200 or 300 things. I'm very certain that over a 5-year time horizon that they will have severe problems leading to withdrawal stoppages that go beyond, by the way, the withdrawal stoppages they've already had. Just in the last week, they've paused USDC, Cardano, Tether, and Binance US. It's been proven that they're sharing a balance sheet.
Couldn't I just raise money and fill those holes?
Well, that's what Celsius and BlockFi did, right? To some degree, that's what FTX tried to do with venture funding. But the reality is, like, if there's fundamental insolvency in the whole ecosystem, because essentially most of these assets are vapor and there's no real bid. Remember, if anyone goes to sell any of these shitcoins, there's no buyers for them.
But what makes you say that? What makes you say that they have a lot of shitcoins on their balance sheet?
Well, because just look at what they're holding right now. BNB is an air token. There was no volume. There was no volume. It doesn't matter whether they're customer funds. If somebody goes to sell, here's what's probably going to happen, Mario. Just to be totally transparent, like what's probably going to happen is that the criminal indictments from the DOJ are going to be the thing, not some sort of like rising interest rates or like obviously the stock market in the U.S. could fall a lot further. There could be more macro concerns, but if there was severe criminal indictments, and we know that they're in discussions with Binance's lawyers about executives serving jail time, that's already been reported. They hired a former DOJ attorney to represent them and hold those discussions. If they actually move forward with that, that could be the type of thing that would trigger both selling of BNB, but also people desperately trying to withdraw Bitcoin, USDC, Tether, et cetera. And I think at that point, it would become increasingly clear that they're not fully backed one-to-one. And if that happens, then there's a real issue.
I just want to point out one last thing, Mike, is that the fact that Binance didn't bail out FTX, another important point to mention is that regulators will not be too happy. There'll be too big of a monopoly. The deal might not go through. So just something worth mentioning as we try to speculate why the deal didn't go through. My bet would be like their balance sheet was just, there's way too much criminal activity within FTX that I still cannot put it in the same basket as Binance. I know Catskill would disagree. But I know you got to hop off, Mike.
Thank you, Mario. Appreciate it. Thank you, everybody. Thanks for hearing me out. Again, I'm not shorting the ecosystem. I don't want it to go to zero. I don't want Binance to fail tomorrow, but I think everybody needs to be smart with their own capital so that they don't get screwed again, like everybody has with Three Arrows and Voyager, et cetera.
What I did, Mike, is I'll send you through my number as well, so we have direct contact. What I did is I've wrote down all your concerns, so we all go through them as a panel. And Catskill shares a lot of your concerns, so he could, cover your side of the fence. But as you jump off, Mike, I know Sam, I appreciate it again, Mike. Thank you so much. And Sam, you wanted to
respond to a few points. Thanks again, mate.
Thanks, Dan. I appreciate it. Sam, you wanted to respond to some of the points, some of the concerns made by Mike?
Yeah. I mean, for a start, there's a lot of big words being used here. Mike stated that he believes Binance are lying, cheating, stealing. But here we are, we're 2 hours into this debate with a lot of very smart people on this panel, and I'm just looking at what we've actually got. So we've got an auditor who said that Binance's assets were 101% collateralized, and we have a sole Wall Street Journal reporter saying that their calculations contradicted that of the auditor by $250 million, and no other media outlet or analyst citing or supporting that. It's nowhere else. It's just a single paragraph in the Wall Street Journal, and we're using that as a big argument for saying that they're not covering customer assets. So that's point number one. We have concerns about BUSD.
On that.
I'll write
You've got to let me
I'll write
finish.
them. Yeah, so Catskill. Yeah, I'll let them. Yeah, I'll let them. What I'll do. What I'll do.
60 seconds and then.
Yeah, all good. Sam, all good. So Catskill, what I'm gonna do, man, is I'm gonna note down Sam's points so we can go through them one to one, so we don't miss any of them.
Got it. No worries.
Oh, good. Thanks, bro.
Okay.
Yeah. So Sam, so the first one is that. Just write them down. First one is 101% backed based on the audit. And the only point of concern is that WSG is the Wall Street Journal report of the $250 million.
Yeah. Then we have the second part. Obviously, we talk about BUSD, concerns about how assets are being converted automatically. That's again, it's valid. I respect it. These are questions that need to be asked. But there's no saying that it's not consolidated at the end of every business day. For example, we have BUSD is regulated in New York, pretty robust environment. It's independently, there's an attestation every month from an independent leading accountancy firm that shows their one-to-one reserves every single month. So BUSD, again, it's out of the control of Binance. If anybody thinks that CZ is somehow controlling Paxos and the New York regulator and an independent accountancy firm, for me, I think it's just more speculation that doesn't have any weight. We've also, and we've talked about we've talked about the lending. Okay, so Binance are regulated in numerous jurisdictions. They do have licenses. They do have actually investment licenses in certain jurisdictions. They have a lending service, a commercial lending service that obviously commercial lending services balance out risk all the time. They make money on one side and they make losses on the other. And we are using that to speculate that Binance may not be solvent. Again, it's just pure speculation. There is zero evidence that their commercial lending arm has any major issues. And I agree in the environment. One thing I do massively agree with, I'm not just 100% dismissing it. One thing I agree with is because of the lack of transparency, we can't confirm this for ourselves. And I completely agree with these points. These are valid points. But I'm saying so far everything is speculation. And then, not to pick on the guy, but again, Mike said, of course, Binance don't have $2 billion in cash. CZ is one of the richest guys in the world. Binance make billions and billions of dollars in revenue every single year. We cannot state that they don't have $2 billion in cash. There are sweeping statements here that are incredibly misleading. There are statements that are directly saying that they're stealing, directly saying they're lying, directly saying they're cheating, directly saying they don't have cash to cover this potential clawback. And again, I don't mind people speculating. I don't mind people saying, I personally believe that they could struggle, they don't have this on their balance sheet, etc. But to make sweeping statements that are, with no disclaimer is very misleading in my opinion. And we have to be balanced. If we're on this panel,
how is that any different than what you're saying, Sam? It's just as
tell me something I've said that is a sweeping statement.
So let's go through. So guys, Catskill, let's me and Catskill go through the points, Sam. I think you've made very valid points. In Catskill, I'm kind of leaning to more Sam's point, so I'd love you to kind of poke holes into them. So first, Catskill, would you agree that the concerns are valid concerns, but not facts that show potential insolvency? Okay. Do you know what I mean by that question?
So a couple things. I've maintained. In Mario, you know this, I've said this all along. I have never said that Binance is insolvent. So let's just get that off the table right away.
Perfect.
When I've said that. And I have probably more problems with Binance than anyone on the planet.
Yeah. I also confirm you said that multiple times.
Yeah. Thanks. And so listen, I just think it's a cesspool of fraud. And so let's just go through the points one by one, and I'll tell you.
There's three of them. Yeah, I'll read them out. So okay, first point, Catskill, 100. Yep. So Sam mentioned that the audit shows there is 101% backed, and the only point of concern is the Wall Street Journal report of a $250 million discrepancy. I will add to it that the auditor kind of stepped away from crypto, removed the audit from their website, but other auditors did the same thing. So the audit is not perfect, and I don't think it covers all assets as well. But yeah, I'll let you respond to it.
So the thing is that we know that Binance US and Binance have commingled funds, and nobody wants to touch that. If they're all in the same wallet, well, then that means it's not fully backed, correct? Sam, please, and I'm asking Sam, please answer that. And I'm not like pushing. I'm just saying, how does that make any sense if all of that is in the same single wallet and they use that for just Binance.com? That means it's factually incorrect. It doesn't. They didn't disclose that's US plus.com.
But I'm struggling to actually put together the point you're making. We're talking about the fact that the audit said it was 101% collateralized, and the only refute of that is an individual paragraph in a Wall Street Journal article. Nobody else in the industry has picked up on this, and it's being used as a point to effectively say that Binance aren't covering their customers' funds. This one thing that was picked up by a single journalist in a single article that's never been cited by anybody else. No analyst has gone through it and agreed with it. That's the point I'm making. I possibly have misunderstood your question, so I apologize.
Yes, I'm asking if Binance US, and this does not have anything to do with the Wall Street Journal. What I'm saying is we now know Binance US and Binance.com are commingling funds in a single wallet or in the same wallet. And I'm not saying that.
And before you could, sorry, just quickly, just the SEC chairman Gensler just said, and it's perfect timing because we're asking all these questions. Quote: "The crypto crackdown by the SEC is just getting started." That was just out by Bloomberg. So I just want to mention that a lot of our questions are probably going to be answered over the next few weeks.
They got the biggest witness now, the SEC. Guys, can I jump on a few points?
All right, so Amin and Alex, I saw you both jump in. Yeah, I mean, I know you've been waiting for ages and you haven't spoken once. I'll go to you next, and then we'll go to Alex. She has a point, Alexander and Dallas. But just on that, just go between Sam and Catskill. It's a good discussion. So Catskill, I'll let you just mention that concern again to Sam so he could respond.
Just quick. So let's say there's 10 Bitcoin in the wallet, and the audit came back and said, yeah, there's 10 Bitcoin, and Binance.com is saying we owe 10 Bitcoin or whatever. But the problem is that if 3 of those Bitcoin belong to Binance US and only 7 belong to Binance.com, well, then that means they're not fully covered and they're not fully backed. That's my point.
I'd agree. I'd agree if that is what the audit had shown. We're aware that there's been commingling of funds. We're not aware it's illegal. You're allowed to. Financial services companies are allowed to commingle funds. Fund management companies are allowed to commingle funds as long as they're not misappropriating those funds.
I'm just saying that they use that wallet. I'm saying that
and I say it's valid. It's probably not good practice. It's probably not good practice.
Yeah, Sam, you're not
disagreeing with everything.
I just wanted to cover that. It's not. If you're a financial services company and you are regulated by the SEC in one jurisdiction and you're regulated by somebody else in another jurisdiction, and anything happens to those companies, then this is the whole what SBF was trying to do. He was saying that the US is solvent and the rest is not solvent. You're not allowed to commingle those funds in financial services company. That's not accurate. If you have to, the SEC should 100% have picked up on this if it's regulating as a securities business, but it's regulating as a money transmitter. And so the money, my understanding is Binance US isn't an MSB.
So Simon, would you agree if I conclude this point as a regulatory concern rather than not having one-to-one backing? Would you agree with that conclusion of that point, Simon?
Yeah, you can't commingle. Now, whether across the group is one-to-one backing, that's the debate. But it is not. You can't commingle.
We're not guaranteeing. Go ahead, Alex.
So the commingling issue is the biggest issue with commingling is not like a parent and sub. First of all, the issue with parent and sub, if that's the way that they're combined, right? The issue there is that there's not a firewall between them if they're commingling their funds, right? And that is because Binance US gains funds doing things that are legal in other jurisdictions, but not in the US. So the issue would be, so ordinarily, if it's not customer funds that they're commingling with exchange funds and misappropriating. That is actually a big concern. If they're commingling funds that are gained in a regulatory compliant way with funds that are not, that is an issue as well, right? That would be an issue. We have to have evidence that that's actually happening. But the bigger issue is really going to be there's a problem in the market now with something called synthetics. And when that is actually the Binance market, the Binance US.
I would,
actually,
Alex, do we mind if we cover synthetics as a separate point? Is that okay, Alex? I'll put it on the list.
Yeah, it's just
okay.
I do want to add that I agree that it's bad practice and they shouldn't be commingling. But what I'm saying is that they are not a regulated financial institution like an investment fund. That they are money transmission licenses across the US, and it does not prove that they cannot cover funds. But I totally agree, it's bad practice. I'm not just going to defend them for nothing. It's bad practice. They need to clean it up, but it doesn't.
I'm gonna file this, Alex. Yeah, I think Sam. I'm gonna file it based on everything that everyone said. I'm gonna file it under regulatory questions, regulatory concerns, rather than liquidity concerns. I think everything's pointing in that direction. So Catskill, the next one. So that's the first one. There's 3 that were mentioned by Mike, or by Sam, as his thoughts on all this. The second one is that BUSD conversion. I think we've discussed it enough. It does not mean the delays. And let me know, Catskill. I understand your concern.
My issue is on-chain and off-chain. That's it. My issue is that on-chain.
We just don't know what's happening off-chain. Yeah,
Correct.
We don't know what's happening off-chain, and that's room for questions.
Yeah, exactly. So I think on-chain is 100% accurate, and this has been my point all along. Is that they make it super opaque, and my point is to CZ and Binance is if they're really operating by the book, open it up. Show us the transparency. Show us off-chain and on-chain. Prove it. That's all I'm saying.
So we just need more. I think everyone is pointing towards the need for more transparency, and that's kind of a point on there's various. There's a few reasons on why they're not giving us that transparency. For example, one of them could be things that happened in the past when they were growing really quickly. And I spoke to a lot of people, that let's just say that would know such things. And it's a valid concern. Was there things they did in the early days when there was lack of regulation? They were blowing up, barely keeping up with things. There was no, the various practices by various exchanges in 2016, 2017, 2018 were not to the same standard that we have today. Maybe there's things back then that auditors will not approve of. So that could be one reason that we're not getting full transparency. And that I think they're legitimately trying to get an audit done, but it doesn't look to be easy, especially after what happened with FTX. But the last one is the lending, and then I'll go to I think Dallas and Amin. But the lending aspect would you agree, Catskill? It's again, we need transparency, but we just don't have enough facts to say that there's major liquidity issues because of the lending practices. Would you agree?
Yeah, and we don't have. I agree. And the other thing is that we have no idea what their loan book looks like. And my only point on this again, and I'll say this in a slightly different way that'll maybe make sense to a lot of people. I think Wells Fargo just got fined again several $1 billion. And if you look at the last 25 or 30 years, it's every 3 to 5 years they have multi-billion-dollar fines. This is a major regulated financial institution in the US. Now, just imagine you've got something like Binance sitting there. I'm sorry, but I don't trust these guys. And I just have almost 30 years of financial markets experience to tell you from everything I see, they're skimming left, right, and center. And there's nobody, since they have no domicile, there's no watchdog and there's nobody, looking at what they're doing. And my simple point is at some point, and this is what I think Mike was saying too, at some point, they're going to get caught with their pants down. And so I don't think they're insolvent. I think CZ's done a masterful job of being a criminal, but I'm throwing red flags up. Is what I'm
yeah, I like how you just mention, you reassure us and take a jab. I do, before I go to Amin, Dallas, and Alexander have been waiting patient. I just want to read out what one. So the team sent me. We get a lot of compliments. The team just sent me a message from someone. Just wanted to take a moment to say thank you. Your sports spaces are awesome, very informative, eye-opening, and the following. I want to say this: the fact you have the balls to host is absolutely priceless. Bottom heart, thank you. Thank you for making tons of others aware, etc. So it's a really, really nice message. But I just want to congratulate including Mike and other panelists, and Dan earlier, and of course Kat, Skill, Dallas, Jack, Alexander, Sam, Amin, Alex, Umbrella, Simon, and the other Alex in Wall Street. Just like you guys to come on and speak about Binance objectively. And look, if there's something concerning, we call it out as it is. Takes balls, and I appreciate you all for doing this. Now, there's the other point that I want to mention. Actually, no, before mentioning, because I've got a few other points that it's important to go through to make sure that, to make sure that, to see if they're backed by fact and how concerning they are for the audience to understand them. But before that, I do want to go to Amin, Dallas, and Alexander. Amin, do you want to kick it off briefly? What are your thoughts on the concerns mentioned so far, and what's your stance on Binance?
Look, for me, Binance is obviously the leader in this market, and they have tried to catch up into cleaning up their game. But fact is, they have installed so many bad practices in this environment that it's really hard to kind of do it back, roll it back. For example, this issue with installing as a common practice in our crypto exchange environment that when you have a market maker, he expects from you to lend him the funds as an exchange operator. This is a huge deterrent for any exchange to have liquidity, because most liquidity providers, they would not bring their liquidity, most market makers, they would not bring their assets into the platform. They would expect from you to loan to them the assets. And that is becoming common practice in this environment, right? The other issue is the issue of huge misrepresentation. Today, for example, you have platforms that are claiming to be regulated, but they're not informing the public what are they regulated to do. Are they a custodian? Are they a security business? Are they a lending business, right? So you have this practice of regulatory arbitrage, which is extremely bad for, first of all, the consumer, but also for the business itself, because that business at a certain point, they will get caught. And I think this is what will end up happening to Binance. And my main concern here today in Binance is that today, finally, the SEC, the Justice Department, etc., they have expert witness. I mean, look, the link between SBF and Binance is obvious. Binance was the only investor to get paid out of the FTX. I mean, they received $2.1 billion as a return for an investment of like 20 or 30 million. I'm not sure what's the nominal amount. So for me, the biggest risk here is Binance, obviously, and we've talked about it last time. We are starting to zero in on the argument of Binance filings, Binance opacities, who is the ultimate beneficiary, why didn't regulators do their job, etc. So what you're going to have is you're going to have a bunch of regulators kind of walking back, stepping back, looking at the filings, requiring new things from Binance, and you probably will see a lot of deplatforming. And that is the worst thing that can happen to a financial services business.
So you're saying that the main concern that you have, I mean, and you run an exchange from what I understand. So your main concern is, first, you do run an exchange, I mean, or I got my...
Yes, I do.
Yeah. Okay. So your main concern, I'm going to mute you because there's a bit of wind, so you can unmute when you want to speak. But your main concern is, you also mentioned regulatory arbitrage, is that the bad practices that haunts their past is something not only do you personally don't like, but that's what's going to get them into hot waters with the SEC. And I kind of want to back what you've said here. Like this one, I'm happy to sit up here and kind of voice that concern. And I've mentioned an example where I spoke to people that either worked or Binance wanted them to work with them, who mentioned that same concern. They rejected very senior positions in Binance because they told me, I'm like, guys, you crazy? Like, take it. This is Binance we're talking about. I remember meeting them a year and a bit ago. They're like, Mario, you don't know, there's just so much pressure and so much heat by regulators towards Binance that it's a matter of time before the crackdown happens. And we've been talking about this for many years. So I do agree with you, and I think regulation could be Binance's Achilles heel. My last question for you, Amin, is would you say that would you have any solvency concerns with Binance? Because it seems that Mike does, but other panelists, no one else has voiced that concern, including myself. I would like to get your stance.
I wouldn't now, but on a going concern basis, I would. Because, obviously regulators, they can find you until they make you insolvent from an operational standpoint. So right now, obviously, Binance has enough assets in its balance sheets, etc. For me, that's not the biggest risk. For me, the biggest risk right now is Binance losing the ability to operate. And I think that is for any financial business, for me today, my biggest fear, I don't care about how much assets I hold. I care about my ability to keep going in this business and to sustain that in time. And that is important. That is the core concern of anyone running a financial business, because without a license, you are a clandestine activity. You cannot become a market leader. You cannot have a position in the market. You cannot have a small or a big positioning. You cannot operate at all. So in our industry, I think the most important thing is to be able to operate in as many jurisdictions as possible, and to stay as kosher as possible. Another side effect of these business practices of Binance is the fact that they completely skewed where innovation in exchanges is happening. For example, things such as, these big exchanges, they used to fight projects or things that that prevents their ability to keep on lending, for example, to these market makers, aggregators of liquidity, any effort to separate custody from the exchange practice, etc. These are efforts that they systematically kind of didn't fund, and they basically prevented from going forward. So it's important, I think, that what Gensler said, he said, we're just beginning the crackdown. And I think he has in mind the fact that he has SBF. SBF understands extremely well the workings of all what we've been talking about. He's gonna become a witness. He's gonna cooperate to the maximum because he wants to get as light a sentence as possible. And basically, they got themselves an expert on their side.
I want a bit of a speculation here. I'll go to Dallas maybe. You did mention something about the regulatory concerns you have towards Binance. You touched on that a few times. So I want to kind of go to Dallas. Do you think there's a possibility that Sam could rat out Binance and could know things about Binance that would be concerning from a regulatory perspective? I think Catskill's putting 100% emoji, so he agrees. What do you think, Dallas?
Yeah, I'll comment on that, and then if it's cool, I want to just make a couple quick
points.
Of
course. I'll let you comment on that and then make your points.
Yeah, so I think it's possible, totally. But to imply that like SBF hasn't, like Gary Gensler didn't already have him is a bit naive. Like he was literally there in the office meeting with them. He's bad-mouthing CZ. He's talking about he can't go to the U.S. He's trying to play favors to regulators. So like, who's to say he wasn't already trying? Like, basically, he could be holding things back. We don't know. It's all speculation. Is kind of, I think, the elephant in the room with that. But to imply that he didn't have him before, he clearly did. Now, a couple quick points I wanted to make. So it's like, no-brainer, Mario. You keep saying this. Everybody says this. Like, we absolutely need to see liabilities. Like, that's the obvious point. And that is, what we don't have. So everything else is sort of speculation around that. But there's a couple of things. So one, like, you have massive targeted FUD from, like, Bloomberg and these like traditional media outlets who have been doing these same things against Binance for a long time, and they do it in real specific points of the market. So I think it's a no-brainer. The BlackRocks and like a lot of the people who really run like U.S. banking, like they don't like Binance per se because he's not in their pocket the same way
Sorry, Stella, I'm gonna give you the mic right after. Just there's a tweet a few minutes ago, like 4 minutes ago, by Mike Alfred, who was on stage. I'm gonna read it out, and Umbrella, thanks a lot for sending it to me, and if you can pin it above, I'll read out the tweet for the audience. It's gonna be his, obviously Mike has got a lot of concerns around Binance, probably the most vocal about it. And I'll read out what he just tweeted. Just got off
surprisingly a positive tweet.
Oh shit! Okay, I didn't expect it to be positive. That's great. Yeah, Mike Alfred, who's had the biggest concerns around Binance for a while now, has been very vocal about it. Has tweeted the following, and I'll go back to Dallas. Sorry, Dallas. Just got off the phone with a fund manager closely connected to one of the earliest investors in Binance. he said a few interesting things. One, he confirmed that Binance has no CFO. CZ doesn't want a single centralized CFO. Binance has 20 plus employees in its treasury, and they serve as a decentralized CFO according to the company. So okay, that turns out to be a good thing. Him not having a CFO is because he has multiple CFOs, which decentralizes that position for, you know, centralizing the power of you know, financial control in one person's hands is, especially in crypto, is very concerning. So decentralizing it among 20 people seems like a good thing to me. Umbrella, would you agree?
I was reading that point. I was thinking on it. I'm not 100% sure. It raises an interesting perspective, but at least it shows they do have a CFO function. They're not like FTX didn't have a CFO function. That was the biggest problem.
The concern we had is that they did not have a CFO. They do have an alternative to a CFO, which I don't find it to be a bad alternative. It's actually pretty creative. We talk about decentralization in crypto. Well, he's a centralized entity that decentralized an important position within his company. So we can touch on it a bit later. I'm going to read out the other points made by
I'll just add on
Mike.
that, Mario.
Yeah, go ahead, Sam, of course.
There is, so for example, in our company, we have to have a compliance officer and a chief information security officer. And those are legal liability to the responsibility. So the decentralization, that does, I totally get that argument. But ultimately, there still needs to be one person to say, I stand behind this.
But that wouldn't be a CFO. That would be a different position to a CFO.
No, Binance US must have a CFO as well as at least one independent director on their board. So I don't know if that's, I mean, they have to. So if they don't have a CFO, because
that could be referring to Binance International.
Yeah, that doesn't relate to the other. I don't know, but there has to be
Binance
one
US
person.
does have a CFO.
Yeah.
Okay, Sam confirmed.
It probably means
the Binance. She used to work at PayPal.
It probably means that each regulated entity has its own CFO, but ultimately, who's on top, who knows the books, and who's responsible is the question.
Okay, and that who could be one or many people. But from a legal perspective, Sam mentioned they do have a CFO in the US, which addresses Alex's concern. So second point by Mike, Binance is in active discussions with potential new, quote, keystone investors. Jesus, including Warren Buffett's Berkshire Hathaway, about an equity round that will provide support and credibility to the company. Okay, that's a big plus. Binance, number 3, Binance has been in active discussions with a tier 1 auditor for a month, waiting to see whether they will take them as a client. Number 4, Binance invested $500 million cash in Twitter and burnt $547 million in BNB last quarter alone. They argue that Binance has never been stronger financially. I found all these points extremely interesting for different reasons, but didn't tell us why. Thoughts? I'll need time to jump back on and tell us what he thinks. But he's got concern. He's pretty, he's not convinced by those points. I'm reading the comments and Mike's response to these comments, including the Berkshire Hathaway investment. But they do show, obviously Mike knows the source, and I would trust Mike's word here. They do show, steps in the right direction, but also a company trying to do the right thing in a world that's very, that's scrutinizing crypto right now. But I will go back to Dallas as you continue your points. But I appreciate Mike making that tweet. Thanks, Umbrella. Go ahead, Dallas.
Yeah, thanks, Mario. That was good context from Mike. Yeah, just running through super quick. So like there's a lot of people who immediately go Binance equals exchange, FTX equals exchange, therefore FTT equals BNB. And I think that's just like lazy. And obviously, again, like nobody knows the full extent of everything, but like one of the big things is like that they were doing was the company was directly borrowing against FTT. And I've heard people like Mike say, well, people borrow against BNB. It's like people do, but does Binance? And there's no proof that they do. That's, I think, a really important point. And they also don't raise capital and aren't actively raising money. So they're not like basically like pumping up the value of BNB to make their balance sheet look good to then raise money. Like, because Binance itself is not actively like need capital for the reasons you laid out earlier, Mario. One other thing too, I wish Mike was here. I don't want to like go after Mike when he's not here. I was trying to, but so he put a tweet saying like Binance's commitment to transparency, like it's insane that they're hiding 70 million of their 108 million BNB from the public and leaving off their reserve reporting. So the reserve that we see on CoinMarketCap, that, correct me if I'm wrong, that would imply assets on the platform that customers or basically account holders think that they have. That's very different than Binance, the company's balance sheet, and conflating the two and pretending like that 70 million BNB, which is sitting on chain but not in a deposited account's address, conflating the two just makes it messy, and I think misses like really important details. So I think that's worth like clearing. One other thing I was going to say earlier, just about the BUSD auto convert. So like if it was me and someone said, hey, like design how you would do that, basically I would hold a shitload of BNB in a reserve, like the same way. So for example, like if you want to bring a bunch of money through a US like finance type of crypto app that uses like Prime Trust, a lot of times the companies will hold a big balance of US dollars and then float that to you as the customer while they're waiting on funds to clear. And I would imagine Binance is probably doing the same, where they have a ton of BUSD, and they will, if you transfer in USDC, they'll credit you and actually give you that BUSD, and then they'll take the USDC and either go convert it on chain through like Curve, where they get 1-to-1, or maybe somebody who has a redemption desk with Circle would be my guess, or they'll try to convert it into Tether. And then the last point, like a lot of people imply like Binance isn't regulated like at all, and like there's a lot of unknowns for sure because they're not like publicly traded, and we don't have whatever.
But they
like,
do have they do have more licenses than any other exchange, so it's important to note that. More than FTX did, and FTX was like a lot of people gave credit before the crash. FTX is getting a lot of licenses. They never had more licenses than Binance.
Exactly, great point. And like Binance itself, like international, like they KYC the shit out of you. You can't just like use it rogue and go for that and just try to do that. And they don't offer anything currently traded there that is regulated as a security. So like there could be whatever, there could be smoke
they
there
offer
with
the
like
earn program. The earn program is a security.
Okay, yeah, I mean. I would.
I think it's hard. Yeah, I wouldn't go into the security argument because that one, it's a difficult thing to defend. They're in a tough spot. From the SEC is probably going to have a blast against Binance. Yeah, so that'll be a whole other discussion. Alexander, anything to add to Dallas's points? I kind of agree with most of them. Kind of let you wrap it up with your thoughts on everything that's been discussed. And then I'll go through all the concerns again with the audience to kind of give you all an overview of what we've gone through today, get Umbrella and Simon's thoughts on it, and then do the pitch of the day. But yeah, Alexander, go ahead, man. Good to have you.
Thanks. Anyway, great for the conversation. So yeah, I just want to say, I mean, look, we're in an environment where FTX just took $8 billion. Following Voyager, Celsius, BlockFi. So absolutely the biggest exchange in the world is going to be under tremendous scrutiny. Investors are worried and they're opaque. So until everything is laid out, it's going to be an issue. So those saying that, CZ speaks like a scammer, or those saying that CZ speaks like an honest business person, technically they're both correct, and we're never going to know. So I would say, self-custody. I don't have any assets on Binance. I don't own any BNB. So I'm not, I'm American, so I haven't been able to have anything on Binance for years. I don't use a VPN to hack through that. And I don't use Binance US, not particularly because they're bad, just because I already have Coinbase for what I need it for. So, as we say, you use exchanges like a public bathroom. You don't live in the public bathroom. You go in there, you do your business, and you get out. Anything beyond that, there is some counterparty risk. So obviously, if there's loans involved, there's more counterparty risk, and we're going to see it. And until Binance is completely transparent, or until if it is in fact a bubble and it bursts, we're not going to know, and we're not going to know until then. So until then, take care of your assets, do your research, and self-custody if that's what you feel comfortable doing, or whatnot. So that's all I got to say on it. Had some other comments about other things, but that's basically it.
Yeah, there's one more point that Catskill's made a few times in the space, and that's a serious concern he's had with Binance. Probably the last new one to add before we summarize all of them for the audience. Catskill, I'll let you jump on that point.
Sure.
That you've just DM'd me about, because I know you've spoken about it previously, but since today we're kind of focusing on Binance, I think it's good to bring it up again.
Yeah. So I'll just give some context to it. So I started out as a trader in the late 90s, like literally the advent of electronic direct access execution SoStrader, which is smaller execution system on the NASDAQ. That was very similar to centralized crypto exchanges. Now, basically, in order to do that, you would connect in with the exchange, but you would have a front end piece of software that somebody else built that you would license. Now, you could configure that front end software package to do whatever it wanted. So it was the brokerage firm's responsibility to say every account how much money it had in it, and so then they had to manually enter that. Then it was the brokerage firm's responsibility to say, okay, account 123 just borrowed 50,000 shares of Microsoft, so that would show that you could short Microsoft and all this. My point is it's fully configurable. This is the very first point I made to Mario before any of this came out about FTX. I was saying this. And so having all this experience, fast forward, we had our token listed on Binance. In 2019, and I'm going to go through this super quick, I won't take a lot of time. We announced 2 deals with public companies and we doubled in price. And this is in like March 2019 when the rest of the market was going down. We turned and went for the next 44 out of 45 days. Our token never closed above a previous day's high. We dropped 74%. I knew 80% of the holders of our token. I knew 80% of the float, which means only 20% is left out there to sell. This thing was routinely trading our token was trading 30-40% of the float on big days. They would have ran out of size. And my point, and this is where I'm going. What I saw them doing, all of a sudden, all this this size was coming in on the offer. They were sending like missiles. I mean, missiles when they would sell, they were dropping us, 5 to 10% in one sell order. In a long only market where there was no futures on our token, people that have big size, they don't sell like that. And they don't sit on the offer and follow it down and push it down. And Mario, I haven't shared the screenshots, but I have all the screenshots of the graphs. I have the screenshots of the level 2 to prove all this. And I have almost 30 years of trading experience to know what was happening. So my point is these centralized software packages, just like what FTX did with Alameda, where they basically coded into them that they could keep trading whether they had money in the account or not. Binance is doing the same thing. This is where I think the big fraud and illegalities are coming in, is their own market makers probably have those governors taken off where they can short the shit out of any token they want. And what I've seen them doing, and this is where I think CZ's smart, is I saw them hedging. Because I know I've been around, I used to run almost a $500 million hedge fund. So I can tell by market activity what's happening. They were shorting the small caps. It wasn't just us. We weren't singled out. And they were buying Bitcoin and ETH. Now, what's happened, fast forward to today, what I think is happening in this downturn, and this is where I wish I could have added some color, but I didn't get to with Mike to fill in the gap, is I think this latest downturn, they've been shorting the shit out of the small caps and the alts, and they are buying BNB. Because BNB is only down about 50 or 55% from the high, when ETH and Bitcoin and all the other shit coins are down 80, 90% or more. It just doesn't make sense that thing's holding up like that. So that's my point. Where I think
because when you make of them buying the quarterly buybacks as well, I mean, they just bought, like to Mike's point, they bought like almost $600 million of BNB this quarter. I mean, not that there's not people selling, but when you have like a large amount of the supply held by them, which they don't actively sell, and they're taking massive US dollars quarterly and buying back BNB. Like, I mean, mathematically, I'm not saying people should go buy BNB, but mathematically, like, it kind of, I mean, you can kind of make a case why it would go down less.
Yeah, but here's the thing. If you look at the whole market, that's not enough. You're talking $600 million a quarter. That thing's trading $1 billion or a couple $1 billion a day. I mean, that's really not that much, and it's definitely not enough on a quarterly basis.
But its high was 650. Was 650 was the high, right?
But the point is if you look at how it traded in comparison to the rest of the market, it really just diverged in this bear market in the past, I think late 2021 when it went way up. And there's something to go that was mentioned about what Mike said. It looks like the Binance controlled wallets control about 80% of the float now, which could potentially also help this. But honestly, what I want to get to too, that's not been covered, and that Mike alluded to it, but look, proof of reserves, if it's not like for like, it's complete bullshit. It's a complete lie. And that's where I have a problem with it. It's fraud. And so what I think is when you're sending your, call it Cardano or Ripple or whatever token to Binance, if they convert it to whatever they want and they say, oh yeah, look, proof of reserves, you know, we owe $1 billion and we have $1 billion. Well, that's not one for one like. And these are some of the little technicalities, but no one's picking up on and no one's talking about. And so then what happened to that? And what I think the reason why they have so much BNB and they have so much BUSD and Tether is because you send Cardano or Ripple or whatever it is over there, they're selling it and they're either going to cash or they're going in their own token to hold it up. And if they do have liabilities, well, what a better way to do it than to push down, and I think they're illegally short in the other ones, they're pushing down the shit coins because who's going to keep buying those so they can keep pushing them down.
Yeah, but you understand that Binance only have 600 tokens out of 22,000. You're saying that Binance are manipulating the entire market. Every token's down 95% in the small end of the scale. None of those are on Binance. Binance has 600 tokens. How are Binance causing...
I'm on
but
their
how are Binance
exchange.
Shorting the other 21,000 tokens that
because
are also down?
Because it's on, what I'm saying is on their exchange, a way for them to make money is that if you send whatever token it is and they just sell it for cash, or if they sell it and then buy their own token, they're now short. And I think their own market makers are continuing to push down and short, and they're running a statistical arbitrage that then when the market goes up, they know their token's going up and they've already made a bunch of money. So when they have to turn and cover and deliver, it's a lot easier to cover that. That's all I'm saying is it's illegal to do some of these things. That's what I'm saying. This is where from my own professional experience and from what I've personally seen and witnessed, that's where I think the fraud is. And I think that the proof of reserves it's not specific enough where they're saying like for like. They're not saying apple for apple. They're saying dollar for dollar. That's not like for like. So if you send 100 Cardano there and they sell it for BUSD or USDT and then that drops 20-30%, that's not the same. I'm just telling you, these are where I think the fraud is.
I want to bring out, I also want to bring up a speaker. He's trying to come up, Taukir Julkar, who was, he had an issue with his account, just get it completely suspended from Binance. He was margin trading and they forced him to close his trade at a loss. Wasn't even able to put up collateral. So I want to bring him up on stage. Also, wasn't there an influencer that was also banned by Binance recently? And I saw a lot of talk about it because he was criticizing Binance. Do you guys know about this?
Yes, it was, what's his name?
Mango.
Mango, yeah.
Kevin O'Leary.
Can someone DM that influencer if you can come on stage as well? It'd be good to bring it up. Mike Alfred is back. My comment on his tweet worked.
Mike, are you able to just confirm the listing terms of your token on Binance? Did they end up with a bunch of your tokens as part of the listing?
So here's the thing. We won the community vote and got listed for free. But this is another thing. Like, look, I mean, I can go through it super fast. 2017, it was a Wix. They were hitting your stops. 2018, they were doing insider trading where they're buying up all the tokens before you got listed. Then the next thing they did is once you got listed, they were shorting the shit out of your tokens. And it wasn't just us, it was everybody. Then 2019, they were running a stat arb. They were shorting the shit out of the alts and they were buying Bitcoin and ETH. Go into 2020, then they started buying all these DeFi shit coins. The second they got launched on Uniswap, they were going into Uniswap, buying as much as they can. And then they had 2, 3, 4 days later, when they had bucket loads of them, they were listing them on their exchange. Then now what they're doing today is they're shorting again all the alts and they're either selling into cash into their BUSD or Tether, or they're buying BNB. And honestly, like anybody that's traded a lot can see this stuff. It's like super obvious. So that's what I want to go.
I want to go to Mike. Mike, I saw your tweet. Is Mike on stage? Oh yeah, there you are. Mike, good to have you back. That was an interesting tweet. You jumped off to take that call from the pissed off hedge fund manager, and then we saw that tweet. So is that give you peace of mind? Do you have more questions? What's the conclusion from that call?
Well, I mean, I'll just tell you what he said. He said, so first off, he called me last week. He was really annoyed and exasperated. I mean, obviously, every fund manager in crypto is getting their ass kicked right now. But he said, hey, I don't think some of these things are factual, but like, what are your concerns? I gave him a long list. And so he actually called a close friend of his who was one of the very first checks in the Binance at the very beginning in 2017. And he's actually in China, or he's in Asia, I should say more exactly, over the last week, working on various things. related to this. So this comes directly from somebody who's been in CZ's presence in the last few days. And he said, so he got asked these questions like, why do you not have a CFO, right? What's going on with the audit? And so his response was, I'll just lay these out one after another. I wrote all of them down as I was listening to him. He said, Binance has no CFO. CZ does not want to have a centralized CFO because he views it as
is that Binance International, not Binance US, correct?
Yeah, this is Binance, like Big Daddy Binance International, the umbrella organization. CZ does not want a centralized CFO because he views it as a risk. I don't know if I necessarily believe that, but let me just lay out all the points and then we can talk about them. But he said Binance has 20, I think he said 25, so I said 20 plus just to be safe, employees in its treasury department, and they serve as a decentralized CFO, according to the company. Separately, Binance is in active discussions with what they call keystone investors, which these would be new investors coming in as equity investors, including Warren Buffett's Berkshire Hathaway, about an equity round. And the purpose of that equity round is not primarily cash, but because they want additional support and credibility around the company. He confirmed that Binance is in discussions with one of the big four traditional auditors. So that could be KPMG, Ernst & Young, Deloitte, et cetera, right, about doing an audit. And they're still waiting to hear back about whether that auditor will take them on as a client. He said, look, Binance put $500 million of cash into Twitter and burned $547 million in BNB in the last quarter alone. He argues that that's a sign of financial strength. And then the last point I forgot in the thread initially, but I remembered and I wanted to share too, is he did confirm that, and I sort of said this earlier, that they did raise VC funding at the beginning. So when CZ says on CNBC that they don't have any VC, that's not sort of technically correct because they, of course, did raise VC. There's a confirmed $15 million equity round at the beginning. That equity round was subsequently converted into BNB. So they basically like force converted the equity holders into BNB. And so now technically there are no outside equity investors in the company. So that's it, Mario. I just shared as is, and people are already giving me a hard time saying, how dare you say that Warren Buffett would ever invest in this? And it's like, well, I didn't say that. Somebody else said it, and I'm just reporting it exactly. I asked for permission. I said, hey, can I share these things that you view as facts? Can I share your comments? And he said, fine, as long as I didn't identify the individual.
And that's a person, you verified that person's veracity and you know that person?
Oh, I mean, this person's one of the biggest people in the space. So yes, I can confirm that the person is a serious player. They're one of the largest investors in a number of the biggest companies in crypto. So,
and I do
yes.
want to also point out that usually when we do a space looking into a particular entity, we get a lot of people DMing us with concerning information, whistleblowers, etc. For the record, we've had a lot of people from Binance reach out to us, and there's some concerning things that we've shared in the past, but not too concerning. We haven't had anything too concerning in terms of DMs so far. I'll ping the team again to see if there's anything new. So just another positive sign. But Mike, what are your thoughts on that call and the points that you've shared? What are your personal thoughts?
Yeah, I mean, I look, I don't want to be too hard on because I really do appreciate that people are reaching out to me and wanting to share this stuff. But I would just echo what I said earlier, which is that there's no excuse for a company that's lending assets and taking deposits to ever not have a CFO. And so this argument that you can have a decentralized CFO, I think that's largely not true. I don't think there's any merit to that. And then in terms of, like, I believe them at their word that they are having conversations with large investors, but the idea that Berkshire Hathaway would actually be interested, I think is a long shot.
What did they say exactly about Berkshire? That Berkshire Hathaway was interested, or they're in discussions? Because obviously
they're having active conversations with potential keystone investors, including Warren Buffett.
Okay, so I think having conversations would be good to get clarity from that person on what that means, if they can give us more information, of course.
I will follow up with them. I will follow up with them next week and see if there's any updates. And then in terms of the auditor thing, like, that makes sense to me. They do need to do an audit. They know they need to do an audit. And so the fact that they're trying to have the discussions, I think, is a positive sign. I would have preferred they did it earlier. When you have this, if you have $50 billion in assets, you should just, even if it takes 6 or 9 months, you should just be willing to do the work to do it. And it seems like they're only willing to do it when they're pressed on it. And so, look, the fact that they're having a conversation at all is good. It's a positive sign. And so I would say on net, it was sort of neutral for me. There's some kind of concerning things about the decentralized CFO thing, but it sort of netted out with, hey, we're trying to be more compliant. We're trying to be more friendly from a regulatory standpoint. They recognize that they haven't done things properly in the past.
Yeah, just going to check a quick DM that someone pinged me about. But Simon, what are your thoughts? Actually, Sam and Simon, what are your thoughts on those points? Like, anything interesting from that? Do you think Berkshire would even look at a company like Binance?
Well, if they did, it would be the opposite of everything that they've represented themselves. They're Bitcoin and crypto bears. They think the industry's rat poison and a scam. I guess you got to separate the organization from the fund managers and the founders. It would be a really strange signal for them. So if Binance did pull that off, I think it would be an incredible signal. And a lot of due diligence would presume would be done.
Guys, I want to ask you a question completely. I want to ask you a question completely separate, guys, because I'm getting a few DMs of people that are really concerned about Sam getting bail. How concerning is that? Like, I don't have much experience in that space. Being released on bail, is that and being under house arrest, is that a big concern?
Where did he find the 250 million? That's the big question.
He used the property under his parents' name, which we've discussed this in the space. Like, we all think that he has a lot more money. We had Hussein come on stage a few times and point that out. I would be surprised if he's not sitting on at least multiple 9 figures. Even people that said, Mario, Hussein's numbers are wrong, no way he has billions, they still said, but he likely at least has a few hundred million. So just something to mention.
Should we stay on the topic?
Yeah, I thought I'd bring it up because a lot of people
Can I add one comment, guys, real quick on Berkshire?
Yeah,
one is that they've already invested in a company called New Holdings, which has a crypto component to their business. So on one hand, Buffett's saying they hate crypto. On the other hand, their firm has invested in crypto-related companies. And that speaks to another point, which is that Buffett is not the only manager of funds there. They have Todd Combs and Ted Wexler, who are two outside managers they brought in that were managing their own funds, and they made them employees of Berkshire. And periodically, those individuals buy shares that are not approved by Buffett. So, like, it's totally possible that Todd Combs might be interested in making a private investment in Binance, even if Charlie Munger and Buffett wouldn't. So again, I'm not making this argument. This is just a point they passed on. I just want to point out that it's entirely possible that could happen, even if Buffett and Munger hate crypto.
Yeah. On the shareholder side, I did, I won't reveal who it is, but I did try and buy some shares in Binance several years back from a shareholder that had invested and did have shares. So there is, as far as I can see, a shareholder structure. I don't know whether that's changed since we had those conversations. With the top 4 audit, so my understanding is that it's Cayman Island is the parent for Binance. That's been all my experience when I tried to look into this. And we've had direct experience of working with trying to work with each of the big 4 in Cayman, KPMG, for example. It took us approximately 9 months just to onboard with KPMG Cayman as a company that's an absolute peanut compared to the size of Binance. So it is consistent that it takes an incredible amount of time just to be able to get KPMG to take you on as a client. So it's not as simple as everyone says, oh, just do an audit. Having said that, there is only one way of dealing with all of these different things, and that is that when you are the size of Binance and the systemic risk on our sector, you have to be, whether you're a public company or not, at this stage, in 2023, they have to act as a public company or this is not going to go away. And so they need to reveal the same level of information that Coinbase does, whether they go public or not. And the only reason they didn't go public is because they did the token thing instead of the regulated equity thing.
That's spot on. That's spot on, Simon. And that's why they're reaching out to people like me, because they want to get back in front of this narrative and explain all the things that they're going to do. Essentially, what I heard today was, we know that things have not been correct in the past, and we want to be better. And again, you could take that at face value and say, oh, that's great, they're moving in the right direction. I take it kind of both ways, which is, one, great that you guys are aware that you haven't done things the right way, but two, culturally, what is going to change in your organization if you got this big without following any rules? Why should we believe you if CZ continues to control every aspect of the business, provides zero transparency, has no board of directors. They admitted there's no board, right? That's another thing I didn't post as a point, but they admitted, hey, there's no board, no CFO. So those are the things, right? And so, Simon, I think you're spot on in your comments earlier, saying that if you're going to lend, you need lending licenses. If you're going to basically be a bank, you need a banking license, right? If you're going to be an exchange, you need to get regulated with your, whatever your authority is from a regulatory standpoint. And they just haven't done any of that. And so whether they're a Cayman entity or not, the point is we don't know.
Mike,
The legacy I think of all of this is really that there was some misleading information that was given to most of the industry early on when developers were tossing tokens back and forth to each other. A VC came in and said, hey, you can sell those. And they're not equity, right? They're not going to be a security. And that was incorrect. And this is so first, when people say, when is regulation coming? Regulation's here. It's been here. We're just not compliant. And the other thing is that, there are a lot of legacy companies now that were operating essentially on rumor. And there's one whole part of this industry is essentially a set of copies of one very non-compliant thing, because they wanted to build fast and they assumed someone had done the legwork. And this is kind of the same thing that we saw when it comes to, checking on which VCs have invested and saying, oh, I'm sure they did their research. So the point is here that you can't rely on anybody to have done the research, whether it's your investment or a build or something like that. Everybody has to do their own.
The herd mentality, I think, is something.
Everybody has to do their own research, but also just remember that part of this is based on this legacy type of business that we're now looking at and looking at as like, this is now, let's hold them accountable and they're terrible. But remember, they're one of like a whole bunch of different companies that operated this way for a very long time without a lot of control or even questions, right? So we just have to be very, very careful when we're talking about a lot of these companies that grew up during an era where there was a lot of money coming at them, and there was just not a lot of people who were saying, remember, you're relying on rumor, not fact. So now we have a lot of builds that are relying so much more on fact than on rumor, but we still have to deal with, what do we do with companies that can't pivot? That's blockchain, right? We can't pivot, but we still have all these problems. How do we resolve this when we're talking about real people's money and real decisions? And I really like this discussion. I think it's been very, very helpful, all of the different perspectives.
Yeah, I think, like, Mike, what we discussed in your absence, and Alex kind of summed it up really well, but we discussed, like, we went through all your points, and even Catskill I think everyone voiced their perspective that they don't have solvency issues, or we don't think they do. They may, we're not saying they don't. We don't think they do, yet there are a lot of other red flags that we're concerned about, from Catskill being concerned about everything they're doing on their centralized platform and not having that transparency, to the regulatory concerns that we have. But on the solvency side, maybe other exchanges, and you kind of did touch on crypto.com. Maybe you can tell us, Mike, is there what would be your top 3 exchanges that you're most concerned about in terms of solvency? Because they've, everyone seems to have survived, all the big ones seems to have survived the FTX collapse and the run that we've had afterwards. Even with my concern, like, I did a tweet that went really viral and got a lot of heat for it, telling people that, hey, I recommend you take your money off crypto.com based on what we've seen so far. I didn't think they have I can't know if they have solvency concerns, but the gate, quote unquote, mistake was enough for me to kind of warn people, and we had other exchanges come on stage and say the same thing, like, hey, it's better to take your money off. But we saw crypto.com withstand that event. My question to you would be, is that because of the shared liquidity pool among exchanges? And for the audience that may not understand this, is essentially what we're talking about. It's not something illegal. Mike, correct me if I'm wrong, but exchanges could have a shared liquidity pool. Actually, Mike, I'll let you explain what that is, because you touched on it earlier and we talked about it back in FTX days. FTX was apparently in talks with Kevin O'Leary and I think it's Huobi, Justin Sun, about having a shared liquidity pool. Maybe you can talk about what that is. Is that something that is, playing a role in a lot of exchanges doing well now? And what exchanges are you concerned about?
So first off, I got to run again, Mario, in a second, so I can't stay. I just came back to report the information that was passed on to me.
We're wrapping it up as well, so maybe that will be the last point, the last question for you.
So yeah, I just Look, I think at a high level, I said this earlier, just because somebody appears to be operating on the surface right now does not mean they actually have all of the coins they say they have. Like, it's possible that in aggregate, Binance has enough liquidity to fulfill a very large amount of withdrawals, but I also think it's pretty clear from my perspective that they probably don't have all of the coins in the same denomination that everybody else does. And one of the ways you know that is in these exchange coordination groups where essentially firms are trading liquidity with each other kind of on the side to support each other, right? And Gate and Crypto were doing that. We don't know the exact reasons. We don't know whether it was temporary liquidity issues or whether it was to satisfy the terms of a proof of reserve type of audit. But we do know that they're consistently sending large volumes of the overall exchange's reserves back and forth between them. And you can see that all on chain. And then you can sort of corroborate that kind of suspicion you have about that activity by their public statements and by the things they're doing, like consistently trying to go after these sort of orphaned bankrupt assets and trying to sweep them into their platforms. FTX was doing that before with Voyager. FTX was doing it with BlockFi. They were trying to pull the BlockFi customer assets and customer accounts into the FTX ecosystem, which would have bolstered their liquidity, but would have ultimately ended up in the same place, right? And so this is the key point. Like, BlockFi was actually insolvent the whole time. The whole FTX bailout was a mirage, right? Because FTX was also insolvent. And so what's happening is these dominoes, as they flip, they can sort of hide the ball in a sense. They can hide the illiquidity or the insolvency in different places, and they're shifting it systematically around the industry. Like Tether, we now know for sure in 2016, 2017, 2018 was operating with like a tenth of the reserves that they were supposed to have. That's proven. They settled that with New York, and they paid a fine, and they agreed to show more reserves and stuff in the future. But if you think that's it, like if you think Tether was the only one that is partially insolvent at all times, like you have another thing coming when you learn about how much insolvency still exists. And the insolvency was caused in part by the number of shitcoins floating around the ecosystem that were being marked to market at some huge value, even though if you actually went to sell them, right, there's no bid for a lot of these assets. But it's also partially supported by low interest rates. Turns out that you can hide insolvency for long periods of time as long as money is cheap and it's easy to borrow and lend, and you can borrow and lend profitably. The moment that the interest rates start to go up, it squeezes all of the lending components of these businesses. It makes it harder for them to obtain liquidity, and it makes it harder for them to provide liquidity to their partners. And so that's what we're seeing, is that acute stage of the cycle as rates go up now, where the entire insolvency and liquidity of the entire sort of Ponzi-nomics of this ecosystem have been revealed. And so I don't think it's a Binance problem, right? I don't think Binance is just the biggest player participating in these shenanigans, but there are other players that are probably more likely to collapse sooner, including Crypto.com. And again, just because Crypto.com appears to be operating right now does not mean they have all your coins. I think that's the key point that needs to be made here. And I got to run, Mario. Thanks again.
No, I appreciate it, Mike. Thanks a lot. Jack in Dallas, any final words on this before we wrap it up with Simon?
No, just really interesting points made. I mean, the new bank thing is important. Like, they're launching their own crypto. They're obviously playing in that game, like, and they're going to have to get an investment in something, and Binance would make probably the most sense for them if they do go through with it. So that'd be interesting to see. I wish Mike didn't leave. I wanted to know why he thought the decentralized CFO is a bad idea. I think actually makes quite a bit of sense for an organization like Binance, given, like, all the elements of trust involved and wanting to have multiple eyes on something as important as, like, the company's finances. But we'll have to say that for another space. But no, I think this is an awesome space, Mario. Thank you, man. I hope some rumors got dispelled for people, and I think a lot of really great points got brought up, and hopefully it just leads to more transparency from companies like Binance.
Yeah, appreciate it. And we do have I'm going to go to Catskill and Jack to kind of finalize this, and then we've got the pitch by Jack and Alexandra and two other speakers. We've got one pitch for the day. But yeah, Catskill, what do you think of the discussion? Like, I know you've had concerns, you've voiced those concerns for months about Binance. The concerns, I think, is still valid. The questions are valid. But what would be your conclusion from all this?
I mean, my conclusion is if CZ really wants to come clean, then he should separate trading and execution and clearing and settlement. So he shouldn't be taking custody of anybody's tokens. That should be a separate entity. And then there should be a watchdog like NASDAQ Market Watch that oversees all this stuff. And so an exchange should facilitate execution and the buyers and sellers and bringing those together. And that's it. They also shouldn't be able to trade against their customers. They shouldn't be able to invest in projects. I mean, he could easily clean this up if he wanted to, and he's not stepping up and doing any of this stuff. And the reason is just like what I said. He's got a license to manipulate, cheat, and steal with that front end software package. And so that's been my suggestion all along, is that, and I think this is where Gary Gensler is going, is he's going to try to push everything into securities. And if you are now trading securities, this is already there. This is how Wall Street operates. So that's where I think it's ultimately going, unfortunately. And I think the real problem is that centralized actors is where we have all the issues in the industry. And I think that's the last thing I'll say is on-chain metrics and off-chain metrics. It's super opaque. We can't see, and I think that's where the license to basically do all the illegal activities lies.
So it's,
and until we can match
for you, it's more of a systematic issue in the space.
Yeah, and the thing is if CZ is really who he says he is, and he really wants to clean this up, then separate trading and execution and clearing and settlement. Separate those into two separate companies, and then put somebody on top that can regulate and see all those, and then flag any unusual activity. And the reason he won't do that is because he's printing so much money doing whatever they're doing. And one thing I forgot to say too is, when you've got all the intelligence of who's long what and how much and where all the stops are, let me tell you what, that is worth billions, tens of billions, especially an exchange that big. And his market makers, they are absolutely using that intelligence, and they are cleaning house. They're cleaning up, and they're literally robbing us blind. And this is my whole point. If you have that front end software package and you've got all that data, and you have some sophisticated traders, they will penny, nickel, and dime you to death. And that's what I think is happening. And that's my issue with this whole centralized component.
I want to get, before we go to Jack, I do want to get from the audience, what do you guys think? Like, after listening to this discussion, I think we went pretty deep, one through the concerns and the other side of the fence on all these different points. Are you walking away from this more concerned or less concerned after the clarity offered by different speakers? Would love to go through the comments and see what the audience thinks. By the way, for the account called Binance Azerbaijan that's requesting to speak, yeah, nice try, man. I'm not going to bring you up. I've looked at your profile. You're not Binance. But I'll go to Jack, and then we'll go to Sam and Alexander as well to kind of wrap up their final thoughts. Jack, what are you thinking about after all this?
Yeah, one thing I haven't heard mentioned is when Binance put out their proof of reserves, right? We're looking to see that they have as much money as they say they do. And what they put out was essentially a spreadsheet with addresses on it that says, like, look, here's all of our money. And people just kind of took it at face value because we saw they had $50 billion. But one thing that was very telling to me, and that I don't think many people paid attention to, was Jesse Powell, the CEO of Kraken. Essentially, he went on Twitter, and he's pretty much like, this is bullshit. We need cryptographic proof of how this money got in there. Show us that it's actually owned by customers. Show us that you have, the proof to how this money got there. And, one of the things he mentioned was, how do we know this isn't including negative balances? So, it started some spark on Twitter, and then CZ went onto Twitter and responded to it. But what was very telling to me is, because if you go to his profile right now and look at his tweets, anybody can reply. But on this specific tweet where he was addressing it, he pretty much turned it off so only people that he follows can reply. It's like he was trying to hide something, which was very telling to me. And I just feel like if I was CZ, I'm a multi-billionaire of this exchange. If I was completely legit, I wouldn't have done that. We've been waiting for Binance to have an audit for a while. They always say that they're waiting to see if they get accepted, which I've never really understood, considering they're the world's largest exchange. So, I kind of agree with Mike on a lot of the things he's saying. And I just wanted to add that in.
Would you go as far as saying you got concerns around their solvency, or you just think they're hiding some things, but you wouldn't go as far as saying like, hey, I just don't think they're solvent? I just want to see how extreme you are on the scale.
Well, the way he's currently acting reminds me a lot of SBF right before we found out that he was complete fraud. It's like, right before he was, if everybody remembers, he was tweeting at CZ saying he doesn't know why he's doing this. They can work together. And a lot of people aren't aware that SBF and CZ have many years of knowing each other from like a business standpoint. You can actually look up an article from, I want to say 2017, where Binance was first getting started, and CZ tweeted out that there was a market maker on their exchange that was essentially trying to liquidate a lot of their users. CZ deployed their own capital and pretty much liquidated only that market maker. And here we are years later, and we found out that that was actually Alameda. So I do think, you know, a lot of the stuff CZ's doing with the whole takedown of FTX, I do think it was on purpose. I'm not really sure about the insolvency part. We really don't have a lot of information on Binance. You know, they're a foreign entity. We have Binance US now. You know, it's really, I agree with Mike when it comes to just, we don't really know a lot about them. There's no CFO, there's no audits. It's kind of, we're just, you know, operating in the dark, and we just trust them because they're so big.
Alexandra, Sam, what do you think? Maybe Alexandra and then Sam, you can wrap it up. What do you think, Alexandra?
Like I actually agree with a whole range of points here. And my purpose on this really is just to make sure that we are looking as much at facts as possible, because this whole ecosystem runs so much on rumor, and that makes it dangerous. So we always have to be cautious whether doing, you know, saying someone's doing well or doing poorly, that we're always backing it up. You know, one of the things with CZ, so this is true. I actually saw the YouTube, it's still out there, where Paolo Arduino said, oh yeah, we're getting an audit. It's going to be within 3 months. And that took place in October of 2021. So that actually still hasn't come out. I don't know if it's that they can't find people who want to do it or what, but the truth is they never come out and correct the assumption, and that I don't like. I do like that, you know, what they offered was what they said they offered, which was, you know, all they said is, look, here's what we have. Our proof of reserves is literally just a static point in time. But that's really like, and this is what I think has upset so many people, is that it's like giving the balance sheet, but not the other financial statements with it. And there were a lot of people who are very upset by saying, you know, well, you don't have your liabilities, but that's not what they promised, right? But they haven't delivered that. They haven't given the full picture. We don't have a picture of what their financials look like any more than we do with anyone else, right? Because with anyone in this space, particularly because we use attestations, we don't use audits. And attestations, they're as much a problem with like Tether and these other places as they are, you know, right now with Binance. Because what are they really? It's just checking the math. Oh, okay, you know, these things look like, yep, those numbers seem to line up. That's okay. But an audit is, okay, you say you have this much in revenue, show me. It's all show me the receipts. I need to see the receipts or I'm changing that number. And that's a big difference. But unfortunately, we're dealing with a lot of people who don't understand the difference and don't understand the liability that accounting firms are under and why they're also preferring attestations over audits. So there's a whole bunch of endemic things that are happening in this system. You know, when we first came on and you said, how is you know, Binance like FTX or like, what do we think about Binance? And I said, I think a lot like it's the same as FTX. What I was referring to is that anything that's a one-person show or based on one person is risky in general. And that is just because everybody seems to either like or dislike that person, and there's more tribalism than facts. And that is problematic. I really just want people to look at it like it's just a thing, it's an entity. And we have to see, like, is this legitimate? Is this working right now? Is it not? If the rules have changed and they haven't changed with them, then we have to look at them. If they have been as compliant as the rule structure has required, then okay, that's fine too. Even if what we require is more severe than what the rules require. So I think that there's a lot here that just, I have to just say, requires a lot more education of the retail investors in the space, and essentially the investors also. Everyone needs more education in terms of what the possibilities are out there and what these people chose. And I think that fundamentally is really determining the health of your options. What did you choose and why? And that's what we need to really focus on. And the other thing that I thought was really interesting that Catskill said is, like, you know, with the centralization and the issues with, like, you got to separate out all the clearance and stuff like that. I just want to say that's a major issue in the stock market as well. That's a whole other thing that right now we have a lot of problems in just dealing with, you know, DTCC and their DTCC. That's a one-man show doing all the clearance. And DTCC is the one that's offering another clearance thing for the crypto space, and that'd be another one-man show operating all of the clearance. And that in and of itself, again, dangerous. We don't want one person financing everything. We don't want one person running everything. We don't want one person making the rules or the regulations. That is all problematic.
This is a problem of a centralization problem. I think, Alex, you've articulated it really well. Simon, Sam, final thoughts on, and Alex, you know, we're going to have you speak in a bit because we have Minxie, which I think you're advising that's going to be pitching for today. It's going to be a cool pitch. But yeah, Simon, Sam, final thoughts on this entire discussion and Binance.
Well, firstly, Mario, like, thanks so much for hosting this discussion and also for, you know, keeping it balanced, investigating the evidence. I think it's so important. I think everybody on this panel has valid points to make, and I've not necessarily agreed with everybody or everything everyone said. I think what we take out of this is there is a clear need for more transparency. I agree with segregation of funds for Binance. I agree with all these points that are made. I don't agree with some of the sweeping statements that, you know, saying that Binance is stealing and things like this. I also don't agree with Catskills in terms of insider trading. That I know a lot of this happened on exchanges, and there were one or two cases with Binance where there was evidence of it, and you know, there was one where there was an insider trader around 2 million before a listing. So, but I don't agree that it was necessarily a prolific thing. I don't think there's evidence to say that, you know, Binance were consistently listing tokens and they were being traded prior to the listing. There's just not enough evidence for that. But again, I don't. There's no issue with the point being raised. I just don't. I think a lot of points that have been raised have been very speculative in this conversation, and I don't think they've been supported by strong enough evidence. But it's all good for us to hear this stuff. I think, you know, in general, anyone listening to this, the most important thing to take out of this is, you know, your own need for due diligence, and you know,
Alex, I would push down on that. Sam, sorry, I would push back on that point. If the smartest people, you know, all of them on the panel today, still can't agree, I just don't think the average Joe can do any due diligence. I think just,
no, you're probably right.
It just makes it
You're
hard.
probably right.
Everyone loves to say, you know, do your own due diligence, but how the hell can someone that works 9 to 5 that only knows basics about crypto do due diligence on the proof of reserves for Binance?
Okay, so maybe what I mean to say is don't listen. Take everything that all of us say with a pinch of salt. Everybody's influenced by their own position in the debate. Like I said, like, I personally feel a lot of very bold statements have been made when they should have been sort of put across as opinion or speculation rather than statements. And, you know, perhaps I've done the same. I don't know, but I'm just saying for anyone listening, you know, when you see somebody tweet, you know, sell all your crypto or do this or do that. That's what I mean by due diligence. Don't just listen to the voices. Don't just listen to the influencers. You know, take a moment to think about the logic, to do your own research and stuff on both sides of the argument. So Mario, thanks so much for giving me the opportunity to speak as well. I really appreciate it, and I genuinely appreciate all the speakers who I disagree with as well, because everybody's very you know, kind and respectful in this forum, which I greatly appreciate. So thanks very much, guys.
Thanks. It's not, the political ones get a lot more heated than this, don't they, Alex? The political discussions. Simon, final thoughts, man. You've been there, and I'd love you to stay for the pitch as well, which is in a couple of minutes. But would love your thoughts. You've been, you know, doing the space even before FTX's implosion. We were together seeing the implosion of FTX, seeing the crypto fall apart live. You know, we were on the space together when the hack happened, and then we went through the Binance FUD together when CZ jumped in. What are your thoughts now after everything we've gone through and after this discussion and the valid points that Mike made and that Catskill has made in the past and made again today?
Yeah, okay, so just some more generalized points. I think there's a danger at this point of our sector of thinking that the answer is only trust US companies. I think that's a big problem in itself. That is kind of the narrative, that if you're not from the US, then you might be dodgy. I think that international regulators are probably going to become more appropriate for specializing in the intricacies of regulating a crypto exchange. So I think, you know, just because FTX had divisions in various other jurisdictions. I, for one, my experience has been that the US was the least, strict in terms of other jurisdictions, which put a lot more pressure on us. So I just want to say that the whole thing, eventually a few jurisdictions are going to specialize in this stuff and become great at it, and it may not be the US, and so we can't apply that, I don't think. The second thing is in the specific Binance case, I can talk to the things that I know and understand, and Launchpad, if you're launching new products and selling them to investors, then that requires compliance with securities laws. If you're offering yield for the investment management of financial products, then that is a security. And so the big Achilles heel in our industry is a belief that complying with securities laws would ruin the user experience that everyone's used to, and it comes from the industry and it comes from the customers. And so that user experience does have to change, and securities laws are not scary things. They are simply disclosures, which is a good thing. And it is also suitability, so you don't end up putting your entire life savings in a company like Celsius. And those things are good. And it also is accountability to insiders to ensure that they're disclosing all of the activities that many people are complaining about that Binance is doing. So, that's the second part on that. And I think just the overall thing, the biggest point here is to actually know the answers. So what I think is really interesting is that this new model of us as a community using Twitter Spaces in order to call out the biggest concerns, and that puts a new layer of accountability onto the company to either strengthen their systems if it's a genuine weakness, or counter it if it's just genuine FUD. And then probably regulators will start listening to these Twitter Spaces and then use their influence over the companies in order to ask the questions that we can't actually get straight answers on. So I think it's just interesting that we're flipping the model on its head as a result of this radical transparency, which is a form of self-regulation in combination with normal regulation, centralized regulation, which I just think is interesting. And so the only way we get the answers to this is, you talked about everyone's got to do their due diligence. You're completely right. No one can do due diligence if you're just simply using an exchange. You don't do due diligence like this on your bank because you're not qualified in order to do such due diligence and stress test them. So the only solution to that is you can reliably say that the right type of people are doing due diligence on Coinbase, because they operate within the confines of securities laws as a public company with audits and disclosures. And yeah, sometimes that system fails, but anyone that's as big as Binance, whether they're public or not, is going to have to operate as a public company if they want to pass the scrutiny of this ultra transparent new kind of regulations that we're creating through self-regulations on Twitter Spaces.
That was exceedingly well said, Simon. I just want to echo one point, and that's that we all on this space right now are the shadow board of directors for Binance, because Binance has actively chosen not to have a board of directors in spite of how good conversation leads a community closer to the truth. And so the only reason why you wouldn't have a board of directors is you don't want the truth. And so we as the shadow board here on this space are asking the questions, as you said so eloquently, Simon. So very well said. I really appreciate your comments.
And I will bring up Kim.com. Simon, you've been on the panel with Kim a few times in the early days of this space with the FTX saga. So I've just DM'd Kim.com a link, because he's been also very critical of Binance. And when CZ came on stage, Kim took a few jabs. So I'd love to bring up Kim. He just DM'd me to come up to share his, he's got a couple of points of concern. But while waiting for Kim to come up, first, Mike, you're an incredible speaker. It's such a pleasure to have you on stage. Appreciate you making the time. Dallas, I know you've had your hand up for a while. Where do you stand on all this? You've been a bit less concerned about a few points. So Dallas, I'll let you get your thoughts, and then we'll go to Kim.com to get his final points on his thoughts on Binance.
Yeah, no, I totally agree with your sentiment. I think Simon and Mike, I think, made some awesome points. I was just gonna say, I mean, one last thing to mention. I think it's just like there's like the magic word of regulation, and somehow, we associate that with like safety, and it's not that it doesn't mean that, right? Like obviously, with proper regulation, you could hopefully avoid, some of the things that we've seen. But I mean, like, look at some of the most regulated industries, right? I mean, you have like the fees that, Wells Fargo and JPM that they've paid for all the spoofing and fake activity they've been doing. You have, regulated securities when people were trading up all the meme stocks, and you have them on Robinhood, super regulated exchange based in the US, literally turn off trading and force people into sell only mode. So, like in many ways, I think that like, there's a lot of people LARPing, pretending like this is for customer protection. Some people care, most people don't, who are in those positions. And the other side of that is, there's a lot of very powerful people who are not getting a piece of the action happening in this space, and they want to try to make it in a way where they can, or actors that they or horses that they bet on are the ones that can accrue some of that value. And regulation is a smoke and mirrors way, I think, of doing that. So I think that's just worth mentioning kind of at the end. But this has been really fun. You guys have made great points.
Thanks, man. Mike is not happy with you. Kim, final thoughts on Binance? I know you've been concerned for a while.
Yeah, so I listened to the space. Sorry, I wasn't up here as a speaker today. I'm relaxing a bit, playing some video games. But I did want to say, after listening to everyone, what I've said before, there are so many question marks around thing for everyone is to just pull their crypto out of it and just play it safe. Also, if you have any stable coin on Binance, get rid of it. That stuff will get regulated out of existence. You don't want to have any stable coin. And the last thing I want to say is you can be sure that there will be legal action against Binance and CZ. I've heard the DOJ being mentioned several times now. I'm talking to people that are witnesses in these cases. So there is already a grand jury. There is already an indictment in the works. I wouldn't have money on Binance knowing what we know today. That's it.
Which kind of confirms the concerns we've had before. And Kim, you've had those concerns for a while, and I know you've spoken to people behind the scenes. You can call them whistleblowers, and people involved in this. I've spoken to people as well, and the concerns are valid. From a regulations perspective, I think most, if not all of us, agree that it's unknown territory, and I think even CZ himself would agree, and he did that on our space, Kim, that self-custody. Every exchange should recommend self-custody. Exchanges are there to trade or for various for loaning, etc., but not for
it's just so
not a
weird
bank.
It's just so weird that he makes that suggestion because it puts him out of business. If everyone would withdraw their crypto from his exchange, he's done, right?
He shouldn't be done, but he shouldn't be done because it's not a bank. So if he's holding funds one-to-one, that's legal. He should be. So if there's, let's say there's 100 billion, let's say it's $50 billion worth of customer funds on Binance. If $50 billion gets withdrawn, they have $50 billion and they can't use it for anything. So that $50 billion is just whether they hold it or don't hold it. So what CZ wants is people to use Binance for trading, but not for custody custody of their funds. So it wouldn't put him out of business unless he did the wrong thing and he used those funds for other things, which he should not be doing so. But as long as they use it,
that is of course if you take his word at face value that it's one-to-one funds, that there's not some exposure there. You just can't believe that. That's what Sam told everybody. That's what every exchange that went down before FTX told everybody. So, it's just not credible. And with all of these storm clouds in the sky, the best thing that you can do, take it out, sit it out, wait a year. If Binance is still around, maybe a bit more regulated, maybe a bit more transparent, then consider again to put your funds in there, at least some of them. But, for now, just be safe, everyone, please.
I agree. I think all of us would agree at this point, rather be safe than sorry. But I think, Kim, I appreciate you coming on and sharing your thoughts on Binance. I know you've been listening for a while.